I don't know what it means, nothing's what it seems, but I feel gravity is holding me down. It's there for all to see, through dirt and through debris. Everyone is leaving this forsaken town. I lost the scenery, my mind's machinery. Seems like Hollywood is starting to catch fire. Under a starlit sky, I see you. Break it down. Yeah, break it down. Yeah, come on. Break it down. One time. Yeah, break it down. Yeah, come on. Break it down. Yeah, break it down. Yeah, come on. Break it down. One time. Yeah, break it down. Yeah, come on. Break it down. Yeah, break it down. Yeah, come on. Break it down. Break it down. Break it down.
Matthew, what's the story with the frog? I don't know. Someone here, if you guys know the story with the frog, let me know. Never heard of it. Guys, not sure if you heard my previous announcement, but we will get started on the hour. We have Matt standing by, Matt Maley here to talk about what is going on in the market, to orient you so you understand cycles, so you understand why things might be going for you or against you, and to prepare you for the week ahead. This is about getting ready to trade this week. All right? So drop those tickers in the chat so we can hit the ground running, guys and gals.
Searching for the way to go, searching for the light to show. You feel me when it's your soul. Searching for the way to go, searching for the light to show. You feel me when it's your soul.
All right, folks. We are almost ready to get started. We've got 120 seconds until we're going to bring on Matt Maley and get going, hitting the ground running. What you need to know is that during this session, participation will be rewarded, meaning goals like asking questions actively, which is good for you anyway. You got to ask the questions to get the answers. But we will reward that participation by dropping in gift cards to the Benzinga swag store. All right, so you can get a hat, you can get a jacket, you can get a mug, you can get, you name it. You get a poster of Jason Raznick's face. If it's not there, I'll make it for you. All right. Also things like liking the video. If we get this video to 100 likes, that will unlock the first prize for everybody. And remember the theme about today. Look at these two little these mountain climber folks on this thing. Look, see how the one in the red jacket is helping the other one in the red jacket get on top of that mountain? That is the theme. We are here to talk about how life-changing it can be to have a plan, a shared strategy. All right? Have your questions ready. Leave your presuppositions at the door. Be prepared to unlearn what you thought you already knew. All right? It's here to make a plan that relies on discipline, relies on years of experience to minimize losses. In fact, to know exactly how much you're going to lose if you're ever going to lose. And have a damn good idea of how much you're going to win when you're going to win. So guys, give me in the chat, give me a 1, give me a number 1 if you are looking to create a plan for the week ahead. Give me a 1 in chat if you want to plan for the week ahead and you want to know some stocks with some setups for the week ahead, so you're not caught with the drawers on the floors. Seth is giving me a 1. Joseph's giving me what I want to see. Let's go. Ixiana with a 1. Thank you, Clyde. Shelly Uwu with the 1. Pam Stonks with the frog. The 1. Tim, guys, we are going to do that starting in just a minute because I want the folks that are late for this to be able to catch the tippy top of the show. But keep those 1s coming and let us know what you're interested in learning about. Rodney, Barry, this session is just about to get started. Remember, the wisest and most successful traders know that they don't know anything. They are constantly unlearning and relearning and maintaining their status as a student of the markets. Humility, discipline, strategy, experience doesn't happen overnight, folks. But if that's where you want to get, you're in the right spot. You are in the right spot. All right, without further ado, I would really like to bring on someone very, very wise and experienced. You all know who's going to be talking today? You guys even know? Do you even know what you're about to learn? Who you're about to hear from? We've got Matt here. Matt Maley is backstage right now. Matt Maley is the author of Benzinga's Stock Picks. Straight up. The research, the technical analysis, the educated forecast, the guidance, the mentorship, all of it. And James, we will talk about indices. The top-down approach to understanding what's going on in the market and then selecting winners, not losers. And let me tell you, Matt loves techno. He is really feeling the music that's on right now. Just kidding. So I'm going to turn this down. Matt, if you're ready, give me the thumbs up. I'd love to bring you out.
Set to go.
There we go. Matt, how are you doing today?
Great to be here for this weekend because, you know, it's kind of funny. Usually we're sitting here in July going into August and it's kind of a boring market and everybody's going through the summer doldrums. Not the case this year, and it's not going to slow down, I don't think, through the year. And in the fall time is going to be, incredibly volatile and an unbelievable time to profit from what's going on in the marketplace.
That is very, very exciting. And Matt, so we get one thing. This is kind of special. We've got James Adams in the chat. I'm not sure if you can see that on your screen right now, but James has been adamant that we address indices. He only knows one word. I think that's how he's been communicating since he was a child with his parents. And the word is indices. So Matt, when I say top-down approach to the markets, what does that mean to you?
Well, I mean, we look at the broad impact first. I mean, a lot of people talk the bottoms up is just the opposite, where you look at, the fundamentals, you're looking at the balance sheets, you're looking at the income statements, you're looking at, and you build your way up to see what kind of profit forecast each company is going to get. And then for the broad indices, you do that company to company and bring it all together. Top down, you look at the, which I tend to do more of, you're looking at the broad spectrum, what's going on in the overall economy, what's going on in the indices that Jim's talking about. It's not just, what indices, but what's happening to the indices and to what correlates with the indices. Is it the dollar? Is it the bond market? Is it what's going on in China? What's going on in the emerging markets? Whatever it might be, you'd have to know those correlations and bring together not just the fundamentals, but the technicals, sentiment, positioning, which is all incredibly important if you want to maximize returns. Because if you're just looking at only the fundamentals, only the bottoms up, you can miss a lot of what's going on, especially for active traders. Because stocks can get way ahead of themselves. That's a good time to short stocks or buy puts, or stocks can get way below where they should be on a fundamental basis, and that's of course where you want to buy them and buy calls.
So, do you think James is going to get during the session? Do you think he's going to get a look at the indices?
Absolutely, no question.
All right, good. And we did get some tickers in chat, and something that you guys got to keep in mind is exactly what Matt just said. We're picking all these tickers because we like the way their chart looks, or we like the way their business sounds. But you've got to know what's going on in the fish bowl before you pick a fish. All right, I just made that analogy up, but I think it's pretty good because Matt is nodding. Matt, give us an idea. If you do want to share your screen.
Yeah, let me pull this here. Are you there? Is that there?
Let me see. So you should have in the bottom middle, just like Zoom, there's a little thing that says share screen that you'll want to click to get started.
Okay, hold on a second.
Within StreamYard.
Okay. Where is it here? I'm sorry.
Bottom middle on the StreamYard window.
Yeah, there we go. Share screen. Share screen. How's that going? And then.
And guys, while Matt is locating the share screen, this is our first time using StreamYard here together, which is the app that we use to stream. Jabez, yo, son, we are live.
Do you have it? Oh, did I share one more time?
There we got it. So I'll wait for you to get your charts and stuff on the screen.
Can you see this?
And then I'll pull it up. It's ready, and I'll pull it up in 1 sec. So guys, drop your questions. This is an interactive roundtable session. We are preparing for the week ahead. Matt has a lot to give you to set the stage, to set your mindset, to unlearn you, like we talked about, so you can be prepared to do things right for the week ahead. But keep those questions coming, and we will even reward your participation. That's how important we think it is, by dropping gift cards into the chat, guys. So I'm going to pull up your screen here, Matt. Do you want to go into presentation mode for that? Go ahead and just click present.
Present. Boom.
Boom. There it is. All right, Matt. So for the uninitiated, I know that you have an introductory slide. Guys, if you guys already know who Matt is and have already been on some of these sessions, give me a 1 in chat so we can get an idea here. But I think it's time for a little bit of an intro for the uninitiated. So where are my OGs at? Drop a 1 in the chat. Shelly. Just one OG? Oh, okay. Clyde, Barry, Tim. Okay, so Matt, we've got some folks that are familiar with you and your style, but I think a little introduction would still be good. So I'll let you get going.
Okay, great. Yeah, just very, very quickly, just My background is, right now, well, let's go. 25 years on Wall Street on the actual trading desk. I've been for almost 40 years in the business. But I spent the first 25 years actually trading. I have so many people in the marketplace now. It's all been, theoretical. It's like, this is what you should buy. This is what should happen. I worked in Solomon Brothers in the 70s, 80s, and 90s. Was the most powerful trading desk on Wall Street. I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s, and then 10 years on at Merrill Lynch. And when I was covering the trading desks of some of the biggest mutual funds, hedge funds, insurance companies, et cetera. And again, that's where you learn very, very quickly, because you're not long-term buyers on there. You're trading for those customers. You get in and out of those trades quickly. And you know what's really going on in the marketplace, what really moves stocks when you want to be an active trader. We all want to have a certain amount of money put to the side that's that long-term 3, 5, 10-year horizon to really maximize the benefits. Your returns, though, it's good to have to know what's going to happen over the next couple of days, next couple of weeks, next couple of months, not what should happen, because what should happen is obviously not what always happens. It frequently doesn't happen. And again, with my market letters, the whole idea is to give people good picks. I mean, obviously, I want to make good picks both on a long-term basis and on an intermediate-term basis, and on a short-term basis for that matter. But also to educate people, because one of the biggest things that so many people seem to be doing nowadays is just guessing. I mean, geez, certain stocks, some meme stock is going up a lot, every day. Well, I think it's going higher, but of course, it could fall down and fall 50% in a couple of days. They're kind of guessing. So that's where really I try to combine the fundamental analysis with technical analysis, so you can make educated decisions, not guesses, educated decisions. They're not all going to work out, but it's really the right way to go. And again, we're trying to maximize our returns. And one of the things I've said so many different times, the worst thing on Wall Street is the market is always right. The market is only always right eventually, and that's how you can. That's why we're as active traders. You can make maximize those returns, because frequently whether it be an index, a group like an ETF, or an individual stock gets way ahead of its fundamental values or way below its fundamental values, and that's when you can make these shorter term trades, some of them very short term trades, that can be very, very profitable and really enable you to maximize your returns. And just to give a quick example of why mainstream Wall Street really doesn't get things right, is they always want to play it safe. They always want to make sure that a change has been made. And the thing is, the best money is made at key turning points. Sometimes it's a key short-term turning point, and then especially at key long-term turning points. Now, last year, in the fall of last year, I turned wildly bullish on the energy stocks, not because of the fundamentals. The fundamentals were lousy. Everybody on Wall Street was saying oil's going much lower. The energy stocks are dead money. I looked at them and looked at some of the technical analysis and realized that everybody was short them, so the positioning was really setting up for a rally. The institutional community was very much under-owned them. The sentiment was incredibly bearish against it. They had nowhere to go but up. And that's why I started pounding the table and said, you got to buy this. You've got to buy this group. And let's just look at an example. What happened here? This is when I turned bullish right here. Back in October of last year, it kind of floundered around, came back, retested the low, and then took off. Well, guess what? If you join it when I got in, using more than just fundamental analysis, by the time I turned more cautious here in middle of June, the group was up 140%. Okay, 140%. The bulge bracket firms, Morgan Stanley, Goldman Sachs, yeah, they got you a nice 54%, almost 55% return when they turn bullish, but 54% is obviously a lot less than 140%. And then some of these other guys, Schwab, BMO, they got in late in the game, but again, they're playing it safe. They were only looking at the fundamentals. They wanted to be sure that the fundamentals had turned the corner, and they're up 8%. 8% is not bad in a couple of months. I'd rather be up 140%. So those are the types of things. And, I've made a lot of calls at key turning points. That's what we're trying to always trying to do, because that's where you can maximize the money in trading. I mean, for instance, this week, and we can talk about it later, but this week, Tesla is going to be reporting earnings. It has not been a volatile stock lately. No matter what you think about it long-term or short-term, that stock was a great trading stock last year. We made some real nice calls on it. This year, it just hasn't had the same kind of volatility. So just because you think it should go a lot higher or should go a lot lower doesn't mean it will be. There are other stocks. There are always other stocks we can look at. It doesn't have to always be the obvious ones. But again, I mentioned the ones from last year just because there were such key turning points. February of last year, I was pounding the table saying, raise some cash. This coronavirus is much bigger than people realize. In March, I pounded the table and said the bottom is in. The Fed is going to help. And we can go on. Again, I mentioned the comments on the turning bullish on the bank stocks. I mentioned the energy stocks, et cetera, but also on individual names. And we will cover this. I'll show you this a little bit more in a few minutes. But Viacom this year, totally on technicals, the RSI, the relative strength index in the stock got ridiculously overbought, the most overbought I'd ever seen anything. I said, sell this name. If you own it, sell it. If you don't own it and you can short it, short it. If you don't want to short it, buy puts. Well, guess what? Over the next few days, the stock dropped 60%, and the put options that I suggested went up 2,500%. Okay, not 25%, not 250%, 2,500%. And even some people, who are on our inner circle chat, they held on to even longer, and they're up. They made as much as 5,000% over the next couple of days for those who held it a little bit longer. And then even again, we want to look at things that people aren't looking at. Lumber prices. I call the top in lumber prices in May because again, it become ridiculously overbought by several different factors, including the RSI that I just talked about. Well, what am I going to do? I'm not a futures trader. The only way you can benefit from up and down in lumber prices is if you're a futures trader, commodities futures trader. Well, no, you can do it in Home Depot. The correlation there is very strong. I suggested buying Home Depot put options. People made more than double their money, again, just in a few days because lumber fell out of bed and Home Depot went down with it. So again, this is the key. I just keep pounding the table. We're not trying to make we are trying to make educated decisions, not guesses. There's too much guessing going on. It sounds good on a fundamental basis, but a short-term trade, when you're basing short-term trades solely on fundamentals, it's more of a guess than anything else, and you really need to really have a plan on how to get around it. Now, before we go on, I'm going to talk about some of the things in just the past week that we were able to really maximized some nice returns last week in the options market. Before I do that, I just want to also talk about we can also trade around some of our long-term positions. If there's something you own and you love it, you think it's going up for 3 to 5 years, that's great. But you can trade around it to really maximize your return. Now, believe me, that's what even mutual fund guys do that all the time. I mean, they're own tens of millions of shares of Apple Computer, and they're buying it and selling it and getting more overweighted and sometimes underweighted, and they play around like that all the time. And of course, the hedge funds, the real pros and the best hedge funds managers are constantly trading around their core positions. And we can do the same thing. Again, you don't want to be too crazy with that. If you own 20, 30, even 10 positions or 100 positions, but even if you own only 10 positions, if you're trading around all 10 of them, you're going to drive yourself crazy. I'm not suggesting that, but you can go around some of them.
Hey, Matt.
Yeah.
We are going fast and furious here. So I just want to pump the brakes for 1 second and just address chat here. We got a bunch of people here. Guys, you've got to have questions. All right. Remember, this is a roundtable preparation for the week ahead. This is a two-way conversation. If you have questions, let us know what's happening in the market, what's happening with blue chips, what's happening with interest rates. Matt has the global perspective. So do not waste your precious time. There's one thing that we all run out of, and that's time. All right. So make sure you're using it well while we've got Matt here. Okay. So I'm doing you a favor and letting you know to use it. DW. It's okay to learn what he has to teach us too. You know what? Because you put the apostrophe before to, which is proper grammar, I'm going to shut up and allow Matt to keep going. But guys, just so you know, you can keep doing questions. And DW, keep that sass coming. All right. Go ahead, Matt.
Okay, let's just talk real quickly about what we had last week and some of the calls we were able to make. And last week was a very fruitful week. Not every week has that, but we do have a lot of conversations. But we had the kind of tier 4 inner circle chat room, and last week on Monday, the market was getting hit pretty good, and obviously it was down a lot. We all know that it bounced back very, very strongly. But on that day, I had some people ask me in this chat room, it's like, geez, these airline stocks are already down. I think they've already priced in anything the coronavirus might be able to have. Delta's starting to get oversold. Shouldn't I be looking at the calls in Delta? And I said, well, yeah, but look at the, I looked at the chart and said, yeah, look and see the RSI, when it gets below 30, that means it's oversold. But I was like, yeah, but let's look at another chart. Let's look at United Airlines. That's more oversold, much more oversold. See, again, that's Delta oversold, just slightly below that buy signal on the RSI chart. This one's more oversold. So I said, let's look at the chart so you look at the chart of United Airlines. So that one I think would be the better play. Well, sure enough, at the end of that day, in the last half hour on the chat, I said, let's look at the July 44 call options. These could be a real good buy here for those who really think that we're going to see a bounce back in the airlines. Sure enough, by the last half hour of the next day, those options were up 167% one day later. And this is when I said take some profits in the stock. But I said take, for those the one that is 176% in one day, that's a home run. If it goes higher, I'm not going to worry about it. But at least take some profits. At least take half of the bet off. That way, you're guaranteed to make money. And sure enough, some people made even more. If they held on to all of it, they made almost 400% in just 2 days. And again, most people sold part there, a little bit more there, but again, well over 100% in just a day.
So Matt, that is really good. So we just talked about airlines. So before we get on over to the chips, we do have a couple questions in chat. So let's try to hit them here. So number one, okay, so we got a question about the chat room. Yes, Matt has a chat room, but we'll get to that later if we have time. So I'm focusing on the market questions right now, but thank you, Jessica. So there was one question that was, Matt, if you see a stock that's 200% above its 200-day moving average. Oh, here it is. A stock that's 100% over its 200 daily moving average. Would you short it?
Now that is a good it's a good question, but again, it's not the only thing I would be looking at. I want to look at again individual stocks. For some stocks, if it's 100% above its 200-day moving average, if it's Tesla a year ago, that's not that much. So it goes by that. But again, what I do look at are other areas to get confirmation. You look at the relative strength index, the RSI. That gives you an idea when it gets above 70, that tells you it's getting overbought. It gets above 80, it's really overbought. And what you want to look, you can always look at the past. You can, and pretty much any chart service, you can look at, the last few years. Every time this particular stock got 100% above its 200-day moving average, that was a good area to buy puts. But also, where's its RSI? If it's that far above its 200-day moving average, its RSI is probably overbought. Is it 75, or is it at a level that is higher, more overbought than it's ever been? And that can give you an idea of how aggressive you can be. You can be more aggressive. Well, that's why I could be very aggressive at Viacom. An RSI above 70 is really overbought. It got to 97. That is the most overbought I've ever seen anything. I knew I could be aggressive. It couldn't go any higher. It was an easy call. So, and then we also have Bollinger Band charts that I look at, which is talking about standard deviations above a 20-day moving average. MACD charts, which is a short-term moving average crossing below another moving average. We all heard about the Golden Cross and Death Cross, where the 50-day moving average crosses above or below the 200-day moving average. Well, the MACD uses the 9-day average versus a 12-day average, and that gives you good entry and exit points for stocks, and especially at key turning points.
Jessica, again, thank you very much. I'll tell you what, Rodrigo is here to help out. Jessica says she's using Matt's tier 3 and she's green 130%. Congratulations, Jessica. Absolutely. Where can you buy the chat room? Rodrigo will drop that in the chat. And otherwise, I'm going to get back to the questions here. This one's about Chinese stocks, Matt. Would love to know your thoughts on Chinese stocks. Fundamentals are good for companies like Didi, Baba, but the regulatory environment doesn't seem good. Are these good long-term holds?
I think no. They will be at some point, but no. And it's a situation where I think the situation in China, the tensions are building up. I mean, the situation with Taiwan is a big deal. That's been pushed to the sidelines. Nobody seems to care about that anymore. But I should take that back. Investors aren't talking about it, but I guarantee you the people in Washington, D.C. really care about it. That's one thing. But now we have suddenly, as you said, these regulatory issues. They're clamping down on, we had another one on Friday, where one of the most profitable businesses in China is actually their tutorial education on, basically being educated over Zoom. And it seemed like it's how profitable can that be? It's hugely profitable in China. They are clamping down. They're threatening to take all of those companies private. So basically all that money that a lot of venture capital people and private equity people have put into those companies is going to disappear because they're basically going to become state-owned. That's a real clampdown. Okay, and that's on top of what they've done to Didi and to Alibaba last year and to all these other companies. On top of that, we have Evergrande, I'm not sure how you pronounce it, but China Evergrande. They're their second largest real estate developer, and their bonds have imploded. They're now trading at 50 cents on the dollar. They can't get money to fund their stuff overnight. People are worried about a contagion in the China real estate market, commercial real estate market, because this company is really having some problems. So I don't want to overstate the things with China, because they can manipulate their markets to a degree that can buoy them and keep a safety net. But there's no question that they want to. They are clamping down right now, and that's gonna make it very, very tough. And the best example I have is Alibaba. Alibaba was the first one where things clamped down, and people are saying it's just because of Jack Ma. It's a one-off thing. He was getting too big for his britches. Well, guess what? They've added to that, and Alibaba, which is an unbelievable company, has not made a new high. It has done nothing but go solidly down ever since. I think a lot of these other stocks are going to do the same thing. At some point, I think in the next year or so, they're going to provide unbelievable opportunities to buy. China its future is incredibly bright, but not right now. The government themselves is telling you we're not going to be pro markets, pro stocks over the near term, and so I would avoid them.
So let me know this ticker. Does it ring a bell? mRNA.
Moderna.
Yeah, Moderna. Yeah, absolutely.
Yeah,
what,
can I go? I'm gonna go. I'm gonna go to my. Am I still on? Can you see my?
Yes. Now I see Bloomberg.
Okay.
So Twisted B, I just want to read it out for everyone. Can we take a look at mRNA, which is the ticker for Moderna, which is a name that I'm sure 99% of the folks here definitely know. He said it looks like it's oversold, like we were just talking about. Matt, could you walk us through Moderna?
Oversold or overbought?
He says oversold, but you know what? I mix them up all the time. I know what I mean, but then I say the wrong thing all the time. So maybe he means overbought.
Well, I think that because you're just looking at the chart here that we have up. I just want to take one line out of this. But you can see this is the relative strength index. This is the RSI. It's at 85. Okay, that is very high. Okay, that is very overbought. Here it got to 86 back in November of last year, just before it's held up a little bit, but you can see just before it rolled over pretty good. Much more overbought than it was at the high. I take it here. Get rid of that. Much more overbought than it was at the high in February. Much more overbought than the high in April. This stock looks, again, much more overbought than here. And let's add a little one to this. Let's see if we can get our Bollinger Band chart up. Again, it's always good to look at a couple of different ones. And bang. Now, see, look at the Bollinger Bands. This is, again, the charts here. The middle line.
What's a Bollinger Band?
Okay, a Bollinger Band. It gives you a short-term reading. Okay, on how a stock is trading versus its 20-day moving average, simple moving average. You see this line here in the middle. That's the 20-day average. The purple line is when the stock gets more than, if it gets above that, it's more than 2 standard deviations away from that. And you can see each time it's gotten above that line, it has come down over the next several days. So we're above that line again. And so I would say when you combine that with the RSI chart, which again is overbought, it looks like this stock is getting ready for a pullback, in my opinion. Could it go a little bit higher over the very short term? Yes, but this is starting to look a lot like NVIDIA was just a week ago. Great company. NVIDIA is one of the best companies in the world. Okay, but it's still corrected 12%, and those who bought the put option still made several 100%, 500% in some cases, in just a few days because it got too far ahead of itself. This Moderna thing, again, you can hold off a little bit, but about buying the stock. I'm sorry, about shorting the stock or buying puts in the stock. But this one is getting ripe for a pullback, and I think the further upside over the next week or two is going to be somewhat limited. We'll probably have to pull back a little bit based on solely on the technicals of the stock.
And I just really quick, Jessica, thank you so much. Congratulations and welcome to the Inner Circle family. You're going to have a great time in chat. I promise you that trading as a group is about to change the way that you look at the markets. So we had a question about Ford. Can you look at Ford?
Now, Ford's reporting next week. Okay, it was going to be. I'm glad it was one of the stocks I was going to talk about for next week, because the one thing that's too many people get a little too worked up about is that it's like, oh my gosh, I've got to buy on the earnings. Well, unless you have inside information, you don't know what those earnings are going to be. So again, you want to look at some of the technicals. What is the setup? Geez, it's a great company. I think they're going to report great earnings, but the stock is up 25% in the last 3 days. Well, you know something? They're going to do the old sell the news situation. It's got no more. It can't go up a whole lot more. But then you get to, so you want to play it. If it's nice and neutral and you're expecting good earnings, and again, unless you have inside information, and if you have that, you're going to get in trouble if you trade off of it. We want to just use educational purpose, these technical analysis to make the call. Anyway, what we have a situation here is I'm going to add another chart to it. Hold on one second. Oops. Add a chart. I'm going to add chart the MACD chart. Bang. Oops. Just give me one more second here. I'm sorry.
So we do have a question about how you use technicals, but I want you to get where you need to go, and then we'll catch up to you.
Great. Okay, there it is. Take 2 seconds. Okay, now here we go. Now it's dipped below its 50-day moving average, and you can see the 50-day held support there. It fell a little below there, so it's trying to regain that level. Its RSI chart getting a little oversold. You see each time, if you look here, each time it's been followed by a nice bounce in the stock. See here, again. See, this one didn't have to get deeply oversold. It usually doesn't get deeply oversold, but it got down here. So it looks like it's trying to go higher. If it can break up, if that earnings report can take it above its 50-day moving average, that's going to be very bullish. And it should give it a nice positive MACD cross, again, which would show that its momentum is indeed turning back to the upside. But when you go into earnings, this is a stock that's going down into the earnings. Okay, again, the best case scenario is when it's going up nice and slow, and then the report earnings goes a lot higher. But the thing is, my point is that if it's negative, at least part of that's already priced in, so you don't have to worry about getting your clock cleaned. So right now, this one's setting up to be having a nice strong reaction if their earnings can beat expectations. And a lot of companies, most companies are beating expectations this time, and it's usually about 70 to 75% beat expectations. Right now it's running at 88%. So Ford's probably going to report a good number. That bodes well for this one on a short-term basis when they report their earnings this week.
So Matt, really quick, what are if you could just say your top 3 that you use, you don't have to list all of them. What are the top 3 technical indicators that you rely on a chart if you could pick them?
Well, obviously there's 2 different ways to look at it. There's indicators and there's chart patterns. The 3 indicators that I look at: relative strength index, RSI, and that just gives you an idea of when a stock is getting oversold or overbought. And again, you want to look at its history, because more volatile stocks need to get above that, well above that 70 line. And for again, Tesla, if Tesla was just getting down to that 30 line that Ford is, you'd be like on. Well, I don't know. I mean, Tesla can fall out of bed at any given time. So that's not a screaming buy for Tesla. It's a nice buy signal for Ford. And you can see the stock did bounce off that, has already bounced a little bit. The next one I look at is the MACD charts, and it's a moving average. It stands for, I forget.
I forget all the time too.
Yeah, but it's hold on. I actually will tell you, but anyway, it's the MACD, and basically what it does, it's showing you a change in trend of momentum. And again, a lot of people have heard of the death cross when the 50-day moving average breaks below the 200-day moving average, and the golden cross, which is when the 50-day breaks above the 200-day. In this case, they use the 9-day and the 12-day, and it's a more shorter term gauge. But when they see crosses, and look at it saw a positive cross there. Look how much Ford rallied. Okay, here, okay, it saw a positive cross, a little bit of a rally, but on a $14 stock, $2 is a big percentage. Look at the positive cross here. Look how much the stock rallied from $8 to $12. Okay, that's only $4, but on a percentage basis, that's a lot. Okay, and it's whatever 50%. So it's an unbelievable move there, and just literally in just a couple of weeks. And if you own the call options in that 50% return was probably 600 or 700 or 800%. So we're looking like it's about we don't have it there yet. There's no confirmation, no guarantee, but it looks like it wants to make a positive cross here, and that's going to be a positive. And then the last thing again is that Bollinger Band that I just talked about, and that was again when you get several standard deviations above a 20-day. That's kind of the main one that people use, and I do as well. When it gets too far above it and too far below the too far above the upper line or too far below the lower line, those are good sell signals on the upside. And if it gets below that thing, it's a good buy signal because it's just kind of getting washed out and then there's no buyers left. I also look at moving averages and patterns like head and shoulders patterns and trend lines, which are very, very important. There's triangles. Again, we could talk about technical analysis and all the different patterns, but trend lines and moving averages are two areas that I really watch very closely because when a stock or index or an ETF really gets going, the trend usually stays for a while. So we're constantly looking for when you get higher highs and higher lows, that's very bullish. And then if all of a sudden you go from that to higher high, higher low, higher high, higher low, and all of a sudden a lower low, it's like, okay, big warning flag. There could be a big change coming on. And then we look at some of these other things as well. But that's what you're looking for when it comes to trend lines. You'll always be looking for those higher highs and higher lows or lower lows and lower highs. That's obviously a very negative area, but those are the things I really look at the most.
Okay, that's great. I think that's a very thorough answer to that question. If you don't mind, could you look at McDonald's?
Sure.
We had a gentleman in here asking about McDonald's before the show started, and I think we should definitely take a look. And guys, we are getting some conversation about the chat room, Matt's chat room. I'm going to go ahead and drop the link while he's pulling out this chart and setting it up. It's the Inner Circle chat room. It's exclusive. It is for a small group. We don't want to get too big, but we are offering half off the price for you guys that are here now. And we're going to give away a free laptop to everyone that buys today. Everyone that buys today gets a free laptop with their subscription because we want you to get started with everything that you need. And this is it. You're going to have a charting tool. You're going to have a chat room. You're going to have a laptop. Half off. Rodrigo is here in chat. If you have any questions whatsoever about that, you can call him. You can email him. He is here. He's going to join the show in a little bit. But the laptop is only available to the first 30 that buy. And we always run out of laptops. So if you want that, go for it now. When you go to the checkout, you're going to see a picture of a laptop, and then the checkout's going to ask you for your shipping information. If you don't see the laptop and you don't see the shipping information, that means that we have run out and there are no more laptops. And that's just it. So 30 laptops. If you want one, I would go ahead and grab that deal now. Does it include Benzinga Pro? This is just the chat with Matt and his stock picks and his mentorship, along with that charting tool and the laptop. And the time, Matt, what are the time frames you're typically talking about in the chat room? Is there a single answer for that?
There's not a single answer, but they tend to be more short-term oriented. But I also, what I like to do is when the specific picks, because I'm constantly talking to, as I mentioned on that Delta thing, people ask me, what do you think about Delta? It's like, well, Delta looks like a good bounce here, but I like United better. The person came in and said, why? And I can show you the chart if you'd like, but we're asking about Citigroup on Monday. Citigroup, boy, it's, Matt, I know it's one of your long-term picks, but it looks like it wants to go lower. Should I be buying puts? And we pulled up the charts, and I was like going, no. We don't want to be, you want to be getting long this. If anything going long, it's getting incredibly oversold. The bond market, bond yields are getting incredibly oversold. The bond prices were getting overbought. And this stock is getting ripe for a bounce. And I showed him the charts on that. And so I was responding directly to it. And I said, you ought to be buying. And then an hour later, I said, the stock has stopped going down today. I think it's ripe for a bounce. You ought to be looking at the calls. And sure enough, the calls went up 170% the next day, and 3 days later was up 300%. So those are the types of things that we talk about. But I also talk about the longer term trends. Like right now, I think the market's is fine near term, especially after it bounced off the key moving averages last week. The 50-day moving average on the S&P and the Russell 2000 did not make a lower low. It bounced off. It's in a sideways range, and it bounced off the lower end of that range very strongly. That bodes well over the near term. But I think as we go into the fall, for a number of different reasons, we are going to be ripe for a correction. And that's the most important thing for active traders. Too many of them. And then 1999, they made $1 gazillion, and they lost it all after that. If you need to be able to play both sides. And unlike 1999 and 2000, there are many avenues where you can play the negative side of the market. Without shorting can be a very dicey play. But now there's inverse ETFs. The put options are much more. They're cheaper to buy. They're also much more prevalent. They're not. They're on the major stocks. There's weekly options, and the major indexes. There's 3x. The S&Ps, they have options expire Monday, Wednesday, Friday, so you'll run the whole gamut. You don't have to buy way out of the money. The ones that are 3 months that don't expire for 3 months and are very expensive.
Okay.
So, we really want to play that. So I talk about both sides, but on the specific calls, and then of course we update the calls from the tier 1 and tier 2 on a frequent basis.
All right, so guys, give us a 1 in chat if you would love a better option strategy so you can get those leveraged returns. Give us a 1 in chat if you feel like you could improve your options game and get better, more reliable returns and limit your risk. Get lots of ones here, Matt. And we still, I just went through the same ones a couple of times. And we still have McDonald's up on the screen. So it looks like you're going to the first of the year in 2019 up until today on McDonald's. Right. And what do you see here?
Well, again, I went back. Now, obviously, everything dropped below its 200-day moving average back when the pandemic just killed things. And but you can see how important the 200-day moving average is. That's the one key thing. Whenever you break a moving average, don't get too excited one way or the other. If it breaks it to the upside, or don't get disappointed if it breaks to the downside. If it does it by only a small amount, it can frequently be a head fake. We always want to usually. So most technicians like it 3%. I like it about 2% above. You can see here it got slightly above it but failed. Like oh no. Then it got slightly above it here again. It looked like it was going to fail again, but on the way back down it held. And then it was like oh my god, it's holding this time, and it's gone straight up. And it went back down, held. Went back down, broke it only slightly, bounced strongly. Here it got down close to it, bounced strongly, new higher high. The stock had been in a sideways range for 2.5, almost 3 months. This breakout on Friday is very good. Now, it is getting a little overbought, not extremely so I'm not too worried about it yet. But this key higher high is very, very bullish for the stock. We'll see what happens with their earnings this week. But the momentum players, and let's say there's a lot of money and institutional money in momentum strategies right now, and the algorithms and everything that go with it. This is the kind of thing they love to see. When you see a sideways range that's going on for several months, and it finally breaks out to the upside. That's what we saw on Amazon earlier this year when it's a nice move. So this one looks quite good. We'll see what happens with the earnings. But what would be really great is if the stock comes back down, retests that thing. Just remember, it retested the 200-day moving average right in here and held. If it's getting a little overbought, my guess it goes a little bit higher, might come back down because it's getting a little overbought, successfully retests that level, and then off it goes. But I'm getting a little cautious when we get into the fall time frame. But near term, this one looks like a good play.
So we got so many ones in the chat for people saying yes, they want to improve their options game. I have to ask you about this sideways structure and this breakout and what you just said about potentially retesting that level. Could you give us an idea of how one might play that from an options perspective if they were looking to take on a little more risk?
Yeah, I mean, the one thing, it's like when you do a situation like this, it's like, what do we want to do here? One of the worst things that people can do, or I said the worst things, I want to take that back. People get caught up too caught up in is making the decision once and that's it. They either buy everything at once or sell everything at once. And there's no need to do that. I mean, you can go, what I would say is right now, if you like McDonald's, you buy a little bit of the stock, because it's breaking out. And then what you do, it comes back and retests. You can spend a lot less money, okay, on the options and still get a big return. So you come back down here, it's like, I've already got some exposure, but I want to really elevate that exposure because I think it's going to hold this level. And then you go and buy the call options, and you go out a month or so, and you go up. Maybe you buy the 250 calls and or 245 calls, and then you've kind of leveraged that position you've already made. But guess what I would say is the reason why I highlight this is if this situation, if this RSI chart was not getting close to being overbought, and frequently a stock can break out of a sideways range before it becomes overbought. Then you just go, it's breaking out. I'm all in. I'm not buying a little bit here, hoping it comes back because it's not overbought. I'm just going to let it run, and that's kind of what Amazon did. Then after a few days, it got kind of extended. Then you say, okay, I'm going to take those profits there and let the thing come back in. And if Amazon, I didn't see where it closed on Friday, but I'm sure it saw a nice rally with everything else. But saw the breakout in this name. It was trading in a sideways range for a long time, 7, 8, 9 months. But look at this thing. It's a see that breakout? Look at this. This is so good. It broke out, okay? A nice breakout. Sold the options here. Come back in here. Then you buy them again because it's holding that 3,500. See how that 3,500 was the top end of that range? It broke out of it. It looks like it's going to hold that level. I mean, look, that's so pretty. That's such a great chart. When you come back and hold the top end of that well, I drew the line a little too low, but you can see what it did. And boy, it breaks out above here. It breaks above here. It is going, oh my God, it's going a lot higher. And this could all happen. A stock like Amazon, that could happen in the next couple of weeks.
All right. So there you go, guys. That is one for the watch list. Amazon on the watch list. And what's that level on the top of that most recent?
I want to do it because the most important thing is on closing prices. Oops. I want to make sure I have the closing price, closing high. This is a shorter term chart. So I mean, it's a shorter term. It looks like it's further away than it is. But 37.31. So 37.31. You break above basically, 37.30. This stock is going to go a lot higher. Now let me just give you. So it looks like the old chart. See how the top end of that range was 3,500. It touched it there, got close to it there. It was there. It's come back down. It touched it on an intraday basis. So this gives us another. So it's been sideways range. No higher highs, no lower lows, nothing. Just sideways range. Now we've got a higher high. Looks like we're making a higher low. You follow that with a higher high above 37.60, 37.30. This stock is going to, I mean, especially since it's been going sideways for a long time. It's a big cap name. A lot of believe me, I've covered a lot of institutions for a while. This was killing performance for some of these guys. They had to take some of their big holdings off the table. It was killing their performance. They still owned it. I don't want to say specific names, but if, for instance, maybe a Fidelity, they almost certainly had to pull back some of their holdings on that. It was just killing their performance by moving sideways. Now it breaks out. It's like, oh my gosh, I'm going to jump. The mutual funds are going to pile back into the stock, and it is going to take off.
Okay, so there you go, guys. Amazon, you've got your levels, you've got it on your watch list, you've got your strategy. So that's one for the books for this week coming up. We've got a broader question here. Cosmo Citizen has asked this a couple times. Do you think with the great earnings that we've recently had, do you think that the Fed will respond in kind by tapering at the end of this week?
I don't think they'll do it this week, but I do think that. Well, I think there's a good chance that they'll do it by the August meeting, the Jackson Hole meeting, which is technically it's the Kansas City Fed meeting, but it's been a time in the past where they've signaled that they're going to be where they've signaled major changes. The thing for me, though, it doesn't matter. I mean, I guess let me restart my answer. This week could be very, very interesting because Chairman Powell has been so adamantly dovish, where several others, quite a few other members of the Fed have turned hawkish. And a guy like Bullard, the St. Louis Fed president, very considered a dove for a long, long time. He's very bullish. He's saying we've met all the requirements for inflation. We've met it for employment. We need to start tapering. Kaplan, who's the head of the Dallas Fed, he's been saying the same thing. It's been making the same shift that they made in 2013, where these guys below the Fed chair were suddenly getting more hawkish, and then the Fed chair changed. That was Bernanke back then. This time around is Powell, but he's been so adamantly dovish. He's got to, if they're going to pull the trigger at Jackson Hole and be more hawkish and talk about tapering this year, he's got to hint to it this week. He can't do it all at once, or there will be the taper tantrum that he's deathly afraid of. The only thing about that I'm a little concerned about that is that. Of course, do they know something that we don't know in terms of do they know that this situation in China? I talked about maybe a possible situation in their bond market. Well, it turns into a contagion. Do they know that this variant and the coronavirus is going to be worse than people realize, and that's why they hold off? But right now, they are providing emergency levels of stimulus, and we are no longer in an emergency. So they think it's irresponsible, unless they know something we don't know. It's going to be irresponsible for them to continue on this pace. They have to cut back, though. If they don't, it will cause a bubble. So I guess my point is, I started to say, no, I don't think so. I think that they will lay the groundwork for the Jackson Hole for the definitive thing. And if they lay that groundwork, it could be enough to shake some things up. I mean, interest rates have already risen. Well, that's another question for another time. But we go on why I'm very concerned about a deep correction this fall, and that could be the trigger for it. It may be put off until the Jackson Hole meeting at the end of August, but we're getting close.
Okay, so real quick, a little checkpoint, guys. We've got 14 new subscribers to the Inner Circle chat room with Matt Maley every day. During the trading week. I just want to get the most recent ones a shout out. Kig and Hannah, welcome to the family and congratulations. Trading as a group and with Matt's mentorship is going to change the way you look at markets, and it is going to make things a lot easier. So congratulations and welcome. We've got a follow-up here, I think, to Citizen's question. And this has to do with different regions. All right. This is a regional question. In terms of growth and return, what are your thoughts on investing in Asian or emerging markets over the next 5 years?
I think that's interesting because I was looking at this. It was in Japan here. I'm bullish longer term. I am getting a little concerned again because of the situation in China. Although that market is not. That market has already come off some. Korea is such a good market. I think it's a great play. But look at Japan. What is going on in Japan? I mean, everything I read, I mean, it can't be because they're concerned about the coronavirus hurting the Olympics. I mean, we've already known for a long time that the Olympics weren't going to be a real profitable one for Japan because of the coronavirus. We've known that for a year. And even the fact that they, we've known for a long time they probably wouldn't be able to have many fans, if any. Now they've done it. So I can understand why it had a little bit of an impact. But look at this market. I mean, it's topped in February, and it's been slowly going lower highs, lower high. And then we finally made a lower low, another lower high. Not quite a lower low. We're very close to making a lower low right here and close to its 200-day moving average. Now it's getting oversold on its RSI. But here is one where I'm really worried that you get much more. This one's going to break down a little bit. It's just the momentum is just not good there. That's just not what you want to see. And if you break below those May lows, and I'll bring it up here at the index on it. This is a chart that just shows you just the closing prices, not the bar chart, not the intraday. Oops. Let's see here. And you can see that we're basically right on those May lows. And so if we get another lower low, it's going to be, shoot, my thing got frozen there, but you can see how it's right near that May low. It breaks below that. It's going to be an important lower low. And that's going to be the kind of thing that is going to put up some big red warning flags, and maybe for the global economy. But longer term, I like them a lot. Shorter term, I'm just worried about what's going on. See here, there's it. I finally was able to get the line written better there. Get that out of the way. You can see how it's just trying to hold that line. If it can't hold it, and remember that 200-day moving average is right there, that's going to be a double whammy down below both its 200-day moving average and its May low. So a lower low below its 200-day moving average. We're not there yet, but it's one that I'm watching and one I'm worried about. So I think you're going to get a better opportunity in the in the fall months, or in, whatever, from sometime between September and December, the end of the year. That's going to be a great buying opportunity. But right now, I'm a little worried about, because Japan looks weak, that the rest of the part of the world could see some weakness later on.
So there you go. There's a little bit on Japan and it being an early indicator for the other markets, which leads me to another question. And just so you guys know, your participation goal has been unlocked. Go ahead and use code trade together for $15 credit toward anything on swag.benzinga.com. That is limited to the first 10 to use the code. So make sure you do that quickly. We will have another goal for further participation during the session, guys. So thank you. And then so on the topic of not just U.S. stocks, which, by the way, guys, those of you that are getting into the chat room, you will see this very soon. Those of you that have not, you should know that Matt is looking at the entire globe and the entire universe of financial markets. So my next question is, is from Mark Cohn. Do you ever talk about crypto, Matt?
Oh, absolutely. It's kind of weird because it's lost, a lot. I say lost its luster, but it's because it's lost some of its volatility. It will return almost certainly, but certainly it's definitely do. And let's just we'll look at Bitcoin and we can also look at Ethereum if you'd like it to. Now, it was interesting on Bloomberg today. By the way, for those who are looking forward, if you're any people out, you mentioned Asia, I will be on Bloomberg Asia tonight at 6:10 Eastern time. I'll be on Bloomberg Radio tomorrow at 5 o'clock. And here in the U.S., I'll be on CNBC on Wednesday about 2:45, and then Friday afternoon in the 1 o'clock hour. Anyway, this 50-day moving average. You see how one of the great things about technical analysis, whenever something has been key support and it finally breaks it, that changes and becomes new resistance, and vice versa. Well, here we are with Bitcoin. 50-day moving average. It got down to it or close to it many, many times. Key support. It finally broke it. It got back up to it, got a little bit above it, didn't hold, and then fell out of bed. Just a great example of what we're talking about when it goes back to old levels. Try to get it. So now here it is trying to get up to the 50-day. What's going to happen this time? This is a key time for the stock for Bitcoin. If it can finally break it out of in a more significant way, it almost certainly is going to go straight up to its 200-day moving average. If it fails again, like it did here, then we got to work to that 30,000. We all know that 30,000 here. It either got to it or slightly below it. If it finally gets more significantly below it, this thing is going to get to 20,000 very, very quickly. That should be. One of the smartest guys I know is cautious on Bitcoin, and he's not sure, but he's cautious. And he said it could fall as far as between 17 and 20,000, and that's where he backs up the truck. He said 17,000 is a giveaway. In other words, he's not shorted. He's not saying it's definitely going there. But if it breaks 30, we'll get some forced selling. Some of those leverage players will get kicked out of the stock. And that's the one thing, is that the leverage in the marketplace, and one of the reasons why I think we'll see a correction this fall, leverage when it has to be unwound causes forced selling. They don't care. They get a margin call, they got to sell. Even if they think it's the cheapest thing in the world, doesn't matter. I got a margin call, I have to sell. And that's when you get some great opportunities. So again, that 30,000 level is key support. If we fail to break above, but I really think the next couple of days are going to be very, very important. I guess my point is by the 3 weeks from now, I think it's going to be at 45,000 or 20,000. And what happens over this next week could be very important to how that plays out.
Fantastic. And then so we're going back to other nations' markets. India. Have you taken a look at India recently?
Yeah, let's see. Yes.
And then Bobby is asking, will you send the laptop also to Asia? So yeah, when you sign up for the chat room today, guys, you'll get not only half off, but you'll also get a powerful trading laptop that has all of the hardware that you need to run all of the trading programs that you could possibly need to trade along with Matt and the folks in your group. Will we send the laptop to Asia? Yes. No matter where you are, we're going to make sure you get everything that you need to succeed as a retail trader. That is our mission. That's what this is all about. So thank you for that question. But just a reminder, guys, I don't know how many laptops we have left. I just know that if you go to the checkout and you see a laptop there and it asks for your shipping information, you're in for the laptop. If you don't see it, that means we're all out. So don't wait. Don't wait. And just a reminder for everyone, we have a 14-day money back guarantee. All right. This is live support from Benzinga staff, electronically, over the phone, email, all that kind of stuff, and a 14-day money-back guarantee. If you're not getting what you need from the chat room, no worries. We'll give you your money back. And so what we're looking at right now with Matt is the Sensex index, which is India.
Right. And I just want to pull up the MACD chart real quick while we're going here. So MACD, moving average convergence divergence index. So that's why we couldn't remember what
we had a couple sharp people in chat that dropped that in. So thank you, chat. You guys really are on top of stuff. But that's the MACD.
So here we are. This is actually the weekly chart. Okay. So this would be this one is the 50-week moving average. This is the 200-week moving average. This is the weekly RSI and the weekly MACD. The one. Okay. So again, it looks good because remember how bad things were in India in terms of with the virus. Gosh, it was so bad last summer, and so it's rallied back with everything else, but it's held up just as well as a lot of other markets, and certainly better than China and then Japan. We see it's getting a little overbought, but you can see here it's not as overbought as it was before it dipped here, back at the beginning of the year, or it was in 2018. Again, these are weekly charts tend to be more compelling on an intermediate term basis, and so my point is, it's getting a little stretched, and so if we do get a pullback in the U.S. market in the fall, and I think that'll have some waves and pull this thing back. But on a long-term basis, and again, I'm going to go back to the daily chart. This is the daily, the S&P. I don't know. Look at see. No, it's not. I'm sorry, daily S&P, daily RSI. It's not. It's come back. It's worked off some of that. This is good because it's been going higher, but its RSI chart has worked off some of that overbought condition. I'm a little worried about this MACD chart. It seems to be crossing over at a lower level. Let me just go. I've gone so far back. I don't want to go too far back. Right. See, it's just looking a little, a little extended. And again, everything was risk reward. I like it. Well, Jeff, I don't know how familiar you guys were with Jeff Gundlach, but he is now considered the bond guru of the world. And he's made some great calls on the stock markets in a while, and he believes that India. He's been on publicly said that India is one of the best long-term plays in the world, and I agree with him. If this is, I guess my point is for long-term holders, hold on to what you have. But I wouldn't be aggressive necessarily adding to it right here. I'll wait for it to come back to you. On a short-term trading basis, it's kind of neutral. Sometimes, as you can see, it's kind of been in a sideways range, but it's in the upper end of that range. So if it can break out, it'll be bullish. Let me get this out of your way so you can see it. But again, this is kind of a sideways range. It's only been, it's been for 5 or 6 weeks. So if it can break out, it'll certainly be positive. But I'm worried that a break below its 50-day moving average come down a little bit. Again, you can't. You always have an opinion, but it's not always a bullish or bearish one. Sometimes it's like, I'm looking at other things right now that have more upside potential, I guess is my point.
Okay, really interesting. So if you guys are able to, or if you're really interested, find ways that you can invest in India if that sounded good to you. So this is just more of that global universe, which is kind of a redundant thing to say, but I think you guys know what I mean. But all financial markets, the full perspective that we're getting from Matt, you get that in the chat room. And trust me, once you listen to the guy enough, I'm one guy that's listened to Matt for a long time. You start to think the way he thinks and talk the way he talks, and it makes you better at what you're trying to do, which is make money in financial markets. Guys, I am going to take a little break and introduce your friend Rodrigo to the stream. He's going to tag in as moderator for this session with Matt for a little bit. Rodrigo, are you there? Hold on, Rodrigo, are you there?
Yeah, can you hear me?
Yeah, I can hear you. I think we clicked the button at the same time. All right, so Rodrigo's in. He has got your questions on lock. Keith is asking laptop. I missed that. Yes, if you sign up for Matt's Inner Circle chat room, that is available for half off today to those that are viewing this session, we're going to give you a trading laptop, brand spanking new, so you have everything that you need. Whether you're a day one trader or you're a day 675 trader, you're going to have everything that you need to either trade at home or trade on the move, but with the guidance and discipline and mentorship that comes with joining Matt's group. And trust me, it is life-changing to join a trading group. Don't trade alone. You don't need to. But I am going to step out for a little bit, and Rodrigo's going to step in as your moderator. And we still got Matt here for a few minutes, guys. So make sure while we have Matt, make sure you get your questions in, okay? And we're going to run out of laptops. I don't know how many we have left, but if you go to the checkout page and see a laptop, that means we have them. If you go to the checkout page, don't see a laptop, that means we're out. So if you want to get that laptop with your subscription, go ahead and grab it now. All right, thanks, guys.
Yeah, go ahead, Matt, with what you were.
We were just talking about taking some questions and talking about the India stock market. But can you see my screen? Or is it?
Yeah, we can see it. We can see it. Just to do a quick summary here, guys. Matt, he does view the global markets. He's not just focused on U.S. markets. He's focused on international markets because ultimately international news affect the U.S. markets. And this is the insight that you would be getting, not just with his picks, but, with the chat room there. But yeah, go ahead, Matt.
No, can you see my chart on NVIDIA that I have up there right now?
Yeah, actually somebody did want to know about NVIDIA. So yeah, AP, NVIDIA, we got you.
Okay, we're gonna just talk about the importance of this is something we had within the last 10 days that we talked a lot about in the chat, and I talked about in Tier 3 too as well. But this whole the thing where it's a great company, I mean, unbelievably great company, but look at this huge rally that it's seen since May, and it become incredibly overbought. You see the last time it had gotten that overbought. So people are saying, well, geez, it's such a great company. It's probably, it's a great time to buy it, even though it's already up. And I'm like, no, look at its RSI, very overbought. Look at its MACD making a negative cross. Look what happened each time it made a negative cross. Boom. Negative cross there. Boom. These are 20% moves. They may not look like much. This was a 16% move. Boom. Lower. Another MACD. Boom. Lower. So I said, no, you ought to be buying puts in this stock. Well, look what happened to the stock. All right. The next 3 days, it dropped 12%. These things rolled over like we thought they would. The options went up anywhere from 400 to 500%, depending on when you sold them, in literally just a few days. But these are the types of things where again, the fundamentals behind NVIDIA didn't suddenly get 12% worse. There's still facts. But it's like, well, Are you just going to guess when it's going to top out and see a near-term average, a near-term pullback, or are you going to use these tools to figure out when it's going to happen? They're not perfect. Nothing is. If there was, we'd all be, gazillionaires. But they work more often than not, and you can take advantage in those in the options market to really make some nice plays. And just another one here where we talked about what happened within that chat room. Earlier last week, at the beginning of last week, at the very end of the week before, the bond yield, the yields were getting incredibly oversold. See how the RI, relative strength, was getting oversold down to that 30 level, started to bounce. The Bollinger Band, okay, it got below its Bollinger Band, started to bounce. That told me everybody was saying yields are going, all the guys on the economists are saying yields are going to 1%. I'm like, well, maybe they are. I don't think they are, but near term they're going to bounce, and that's going to be bullish for the banks. And we had a guy on the chat came out and said, "Gee, this is on Monday," saying, I know you like Citigroup on a long-term basis, but this, the yields are falling through the floor. This is really bad for the banks. Shouldn't we be buying the puts on Citigroup for the near term, even though you like it long term? And sometimes I do make calls like that. But I was like, no, this is they're down because yields are down, but yields are ready to write based on the technical analysis. And look at Citigroup. It was not as oversold as it was over here in June, but it had gotten down to its 200-day moving average. Whenever you get oversold and test a key moving average, it usually bounces, at least on the first try. So I said, no. In fact, now you should be buying puts. Later in the day, I said, you ought to be buying calls in the stock. And look what happened. This is Monday, late in the day. By the July $66 calls, by midday the next day, they were up 130%. That's when I said take profits. Some people held on for a little longer. I don't know if they sold them all the way at the top, but you can see they sold, made over 300%. Maybe if you sold half here and the other half here, you made like 200% in 2 days. Again, this doesn't happen every. Our chat room, if we made calls like that every single day, we'd be gazillionaires. But when those opportunities arise, even though the fundamentals look like it was the exact wrong thing to do, it actually turned out to be the exact right thing. I actually said buy the Bank of America calls at the same time. My chart broke here. I don't know why, but they went up about 130% and a couple 100% the next day. And the last thing I'll just say, not last thing, but just again, one more thing about what happened in the chat room. Oil was getting killed. I had been wildly bullish, as I talked about earlier. I turned cautious, though, in June. I said, we got to get away from these energy stocks. They're going to take a breather. Let's walk away. And, again, Chevron's one of my best calls. I love the stock. I said, let's buy this. When I bought the thing was yielding 7%. But here I said, we still love it long term. Maybe we take half of our position off. And again, the stock goes down 15, 16%. It got down to its 200-day moving average at the beginning of last week. Look what happened the last 2 times it touched its moving average. It bounced nicely. So again, we've got something. We're not guessing here. We've got at least some sort of we can make an educated guess. The 200-day moving average is a great support level for Chevron, and it was getting oversold. So I said, I still think the oil stocks can go a little bit lower here over the near term, but Chevron is one you ought to buy because it still has an over 5% yield. And for those who want to be a little bit more risky and would take on a little bit more risk, buy the calls. And sure enough, the call, I didn't say buy it, sell them the next day because I believe more in this one than in the other ones. And again, the calls were up under 300% just 2 days later.
Good stuff, man.
It's again, I wish I could say, that was one day where I made 4 calls and they all worked out incredibly well. I wish I could say I did that every day. I certainly don't. And we miss them. Somebody asked me about ARK on the same day, ARKK, and I said, I don't really like that one. And it rallied nicely. So I missed that one. Again, I don't pretend to be omnipotent. Everybody's stretching the imagination. But the point is, you want to avoid guessing. You want to have the tools. Again, for me, long term, you'd be like, a couple of years from now, it's like, Matt, thanks a lot for teaching me all this stuff. I'm on my own now. And that's the whole idea. But when you work with people in a chat room like that, you can really learn a lot. And I've had almost 40 years of experience learning some of these nuances, and it can really pay off.
Right. And Matt, just to, I do remember one of these early picks when you were very, very bullish on MVIS. And we have a lot of members here who are pretty green on that trade. You were bullish when nobody even knew about it. And, ultimately, I think that one, 700, 600, like talk us through that trade, because all the chat members banked on that one. So we just want to get like a little follow up here, a little sneak peek of the chat room here with Matt.
Well, let's go back to now where the stock is. Can you see my Bloomberg right now?
Yes, and just to go over here really briefly, in the chat room, you will have full access to Matt Maley. Rarely, I mean, if you don't know who Matt Maley is, you must be living under a rock. This man is on Bloomberg, on CNBC. He's a chief market strategist at Miller Tabak. He's got 40 plus years of experience at Solomon Brothers, Merrill Lynch. This is the tippy top. This is the guy that you want to be listening to. So you will have full access to Matt in the chat room so that you can go over your picks, your strategies, any loose ends that you might want to cover. Ultimately, this is, when you ask a question to Matt, you're getting the right answer, right? You're not going to social media or Reddit boards. This is this is really what you want to do as an investor. But go ahead, Matt. Sorry about that.
Yeah, and of course the whole idea is that hopefully I'm providing you the kind of thing that the information that will help you pay for the subscription. The comments will help pay for the subscription on its own.
That Viacom put. That Viacom put, I know you sent out the sell alert at 2,500. I took a chance on that one and I wrote it all the way down to 5,000% gain. So I could have gotten in with good and out with 2,500 when Matt sent out the sell alert. But I mean, Matt's picks just work. The guy knows his stuff. So yeah.
So here is Microvision. Now let's just talk about and it's, again, this white line is not the best in the world because it's the same color as the others, but you can see how it made a higher high right here. Okay, it had been stuck in a sideways range for a while. I loved it fundamentally because it's two things. Number one, they have the new display thing for smart glasses that Tim Cook thinks could really, smart glasses. Everybody's like, no, this is not going to work. He thinks it will work now if they have the right display models, because people could just wear normal glasses, not ones that make you look like you're in a 1950s sci-fi movie. But much more importantly, they have the LiDAR technology, laser radar. And that's what these self-driving cars use, and that you can't without LiDAR. That's the best technology. In fact, Tesla shunned that we don't want to use it. We don't want to use it. We want to use our own technology. Well, guess what? One of the more senior guys at Tesla about 4 or 5 months ago, or 3 or 4 months ago, left and went to a LiDAR technology because he knew that's for the future. And it's not just for cars. It's, you have for robotics, all these things. They need to be able to have that laser radar so that they don't bump into things. Even for waiters and waiters in the future, you can't be bumping into people. They need to have that know those obstacles are, or even the vacuum cleaners that go around people's houses. They use that LiDAR technology. So I love that on a fundamental side. Then it broke out to the upside, and it's been up. It's up. It's been going straight up. But one of the things I really like, and I'm going to go back to my my presentation here. Let's see if I can pull it up here. On the tier 3 and on here, we want to hold this one for a long, long time. I think it's going to go a lot higher. Now, this chart's a little old. This ended in June. Right now, the stock's down at 13. It's getting back down to a buy. But this is what we did. We bought it there. But look how overbought it got within just literally a week or two. And it stock went from $2.68 almost to $10. And I said, sell half. Again, we love it long term. We just want to sell half. We're going to buy it back when it gets to $5. Sure enough, went to buy. Look what it did. It went all up to here. Again, I said sell here. Again, only sell half. Got back down to here. We bought 25%. Okay, so now we own 75% of a full position. I didn't say sell here. I missed that one. But we bought here and went to a full 100% position. Now it's up, goes up to here. Sell, again, half the position. Back down here. I said buy. I didn't put it here on the chart. And again, I went to go back to a full 100%. This one I just want to get here. On these two cases, it's just the way the chart went. I didn't get the exact top on these ones, but I came very, very close. I guess is my point. This one's a little bit more accurate where I was closer. And now the stock's down below 15. It's getting back towards, but you see how it got overbought. And it got caught up in kind of the mean thing. So it was like, so in other words, now the stock's down here. We're still up over 400%, but we're up a lot more than that because we own a lot more of it because we sold here and bought it back here. We had more money, bought more shares. We now own a lot more shares than we did before. So even though the stock is up 400%, those who were in it early on, and even since then, have been able to trade around it in a way to even, really up look more than 1,000%. And we're looking now at this stock. I'm looking now if it could get down here back in the $12 range. We'll see what happens with that. We'll look at the chart then. But that's what we're trying to look at some of these plays. I mean, want to own a Chevron? We traded out around a little bit, but Chevron's not a real volatile name, so we're not going to do that too often. We may do 1 or 2 trades a year, pare back on it, add to it like we did. We're not going to do that this many times in Chevron. And if you try to do it in every single one you're holding, you'll drive yourself nuts. So you can't do that. But this is what I'm really trying to do with the tier 4, with this inner circle chat room, is to take advantage of these moves on certain stocks, because they can really get way ahead of themselves and they get thrown out with the bathwater. So in those we create great selling opportunities to take some profits and great buying opportunities to get back into the name.
And since this is real time, as you know, the markets, they're open from 4 in the morning till 8 p.m. Being in a chat room does give you the benefit of having access to Matt at any point during the day. Usually when you see everything start going down and you don't know why, you just turn on CNBC or you're trying to figure it out. Might as well ask the guy they bring over to ask him. Whenever there's a crash at CNBC, you know what they do? They call Matt Maley. Literally every single time, because they ask the people that know. Well, guess what? You have full direct access to Matt Maley in the chat room, so that anything that's happening in the markets, you get his direct input feedback real time. Don't wait till tomorrow when your account's 50% down. Ask Matt so that you take the precautions so that this market, even as it's volatile, you have the right guidance for that. So I see a couple of questions here about the chat room. John Doe, the hours of the chat are 24/7. Obviously, Matt is a human being. He has a family. He's a chief market strategist. The man is busy, but he still bats for you guys. So he's in that chat room answering questions. I'm there all day because this is the education that I don't get elsewhere. The way that Matt interprets bonds, interest rates, yields, stocks, Bitcoin, oil, international news. You see, I've only been trading for a couple of years. Matt, we're talking about several decades. So trust the man that's been doing this for a long time successfully. So let's see. We got a couple other questions here. Let's go over Tesla. Do you think we can go over Tesla, Matt?
Sure. And I do. I mean, we had one person at the beginning. Can we do the indexes? So if we want to
for sure. Let's get to that guy.
Let's do Tesla first. The one thing about Tesla, and they report this week. In fact, the report, I believe, 99% sure it's tomorrow night after the close. The stock is not the most volatile in the world anymore. Will it return to that volatility? I almost certainly think it will. But look at this thing. This RSI chart, pretty neutral. There's nothing really to say there. It's been riding its 200-day moving average for a while. Now, one thing we did see, and I got this question, like, oh my gosh, we got a death cross. The 50-day moving average, that's the yellow line, cross below the 200-day moving average, the purple line. That's a death cross. And people were asking me left and right. It's like, oh my gosh, is Tesla going to zero now? Now look, was the last time we had a death cross? It was, back when God was a child, way back here, like 2019. And so, gosh, this must be the end of the world. Going, well, not necessarily at all. I mean, they report their earnings, but the thing is, it's not a real death cross. What people forget, it's not just the 50-day moving average closing below the 200-day moving average. They both need to be declining. The 200-day moving average in Tesla is rising, so it is not a true death cross. So I'm not worried about that. That doesn't mean the stock won't go down, but it's not my concern. My real concern, I'll get that 50-day out of the way just so we can see it better. Again, it's riding against that 200-day moving average. At some point, it's going to break more meaningfully away from that thing, and that's when we're going to get the real idea of what's going on. But here, we got the battle lines are very well drawn in my mind. We have 700 level. If it breaks above 700, it's going to run, and it's really going to run, because look how many different times it's tested that. I mean, gosh, it's like 6 or 7 times right here, then another couple of times in mid-July. You break above that, that's going to give it the kind of momentum. It's going to take it straight to $800. Now, I say, well, gee, should I buy that now? I mean, usually when Tesla's really, really volatile, like it was last year, you could even buy a straddle, where you buy both a put and a call, because it's like, geez, if it's going to move 200, if the option is going to move 200%, not the stock, the option, anything I lose on the one option, I'll more than make on the other option. That's what you can do when volatile stock are right at a neutral area, and some new news is coming out like earnings that could really get it to move. But it's been so quiet lately. I don't have as much confidence on that. So I guess my point is sometimes even in a stock like Tesla, it's like, no, I want to get some key levels broken before I really jump on board. Here, it's going to be the $700 level. You break above that, that's going to be bullish. And then we break below these lows. Here, you can see this is the intraday low was 620. That's both those times, both those days in July, 620, 621, 2 different times. It breaks below that level, that's going to be a problem. Below 600, that's a bigger problem. That will probably take them. So that's when you want to make the negative bets.
Hey, Matt, sorry, don't want to interrupt you. I just want to bring up really quick. We have about 12 laptops left. So just want to let you guys know we only have 12 left. If you don't see a laptop in the checkout, that means that we ran out of laptops for the moment. So just wanted to give you guys the heads up. Sorry about that, Matt. Continue, please.
No, not at all. And again, one of the reasons why I'm leaning towards the bullish side is this goes back to we've talked a lot about RSIs and these different signals, but I also like to look at patterns. And right now, this has formed a descending triangle pattern. And you think, well, it's descending. Well, that must be negative. Well, no, not necessarily, because it breaks it out to the upside. See, it's trying to break out. It keeps faking. So that's why if we break above 700, not only will we get a higher high, but we'll get a confirmation that it's broke this descending triangle pattern. That's going to be wildly bullish. And the fact that it keeps trying to do it tells me that it will probably succeed at some point. So, so I'm leaning definitely to the bullish side, but I really want to see that break above 700. We'll if you go ahead and you buy the $725 calls there, and the stock runs to 800, you will have made more money if you did it now. But again, it's risk reward. It's not guessing. We'd be much more educated with a break above 700. We got more, so it gives it much better chance that you'll make money rather than just this. You're relying more on hope. Right, more hope. Hope's a lousy investment strategy, and you'll have a lot less hope once again. Not $700.25. You want to get to 703, 704, then you're really gonna have that confidence. And believe me, if it's going to 800, what the hell's the difference if you buy it at 701 or 704, especially if you buy the options.
Okay, great analysis. And I mean, just so you guys know, Matt, I mean, he's a chief market strategist. So these questions to him come naturally, and he does this for everybody in the chat room. I've asked him questions. I don't know if he knows it's me, but I do ask him about some picks and all that stuff because I trust Matt Maley. I look at his background. I look at his career. That's the first thing I do when I was trading and trying to find services. The first thing that I do is I see who is the man behind the picks. And, I started reading about Matt Maley, his career. You got to respect that. The guy has been doing this for such a long time, knows his stuff. So I do want to congratulate here. We do have a new Stock Picks Inner Circle member, VN4233700. Thank you for joining. We want to give you the official welcome here, guys. Thank you very much for joining the family. Happy to have you here. And we do have another ticker here, Matt. I've traded this one quite some. CLF, Cleveland Cliffs. You know this one, Matt.
Oh, sure, yeah. Well, it's interesting because this one, boy, it's funny because the CEO always seems to get himself into trouble for saying things. They're just being gruff. He told one time, he was on a conference call and he basically told an investor to go stick it in his ear. It was kind of funny. But here, this one. Again, we just look at the chart. This is a little bit of a concern. Okay, I'm going to take these moving averages off for a second and just show you why. See what we have is a here we are, a lower low. Remember I talked about. Okay, but nice bottom there. Oh, couldn't quite make a higher high. Oh, but we did make a lower low. Higher high, lower low, higher low, higher high, higher low, higher high, oh, higher low. Oops, lower high, now a lower low. That's a concern. That is a concern on a technical basis. And you can see here, that is also taking it below its trend line, going back to March. Now the key is what does it do on this can it regain that line? If it does, that's going to be a bullish. It's a neutral thing coming off an oversold position, a somewhat oversold position. So there's some potential here. So the key is like we need to see what is it going to do here. That level is, I'm going to go a little above it because I'm going to go out a few days. Basically 22 and a quarter, 22.25, 22.30. If it can break above that, that's going to be bullish. And of course, if it can break above 23.50, that'll give it a higher high. And it'll get it back on track. In other words, this will turn out to have a head fake, and it'll be quite bullish. Sorry to get those things in the way, kind of harder to read there. But see what I'm doing here? I'm trying to see, will that former support line provide strong resistance, or can we regain that line? It looks to me like it wants to at least test that line, and then we'll watch it from there. I just want to look, though, as we're watching here, we'll look at oops, wrong thing. Let's look at the MACD and the bullet.
Yeah, and I have a follow-up on CLF because it is an interesting one.
Yeah. Update. Bang. Oops. Shoot. Didn't take care. One more second here. I'll take a second. MACD. There we go. Yeah, now look at this. See, the potential is certainly there. It gave us a little head fake. It didn't cross positive there, but it's trying again. And you can see this is a key point, because if it doesn't break out here, it's going to be big trouble. So I'm kind of leaning more to the bear side, believe it or not, although I like the company fundamentals. But again, if we can regain that and gain that nice positive MACD cross, because we got a negative cross there that came at a little lower. This cross came at the same level. This negative cross came at a lower level. That means the momentum is fading. So this one's starting to look a little dicey, I'm afraid.
Okay, Matt. So I've watched pretty much all of your interviews on Bloomberg, on CNBC, and nobody's ever asked you this question. And, as retail traders, we do want to know how to address the volatility in the market. So you're looking at CLF, right? You were pounding the table on commodities over a year ago. I remember you've been bullish on commodities when people were not even thinking about commodities. And, you reap the rewards and your subscribers as well. So with the current new Wall Street bets and all this stuff that's happening in the market, I mean, CLF it's still a legitimate company. They're in a good market. Their numbers are impressive. I believe undervalued by fundamentals, but then you have the Wall Street bets crowd, and then it becomes a meme stock. So you take a company that's a legitimately good company, Matt, that in commodities, so it's already an inflation trade, right? So you already have the Fed, yields, bonds, so you already have that affecting the stock, right? And then you have something crazy like Wall Street bets just pumping it because they like the stock. How do you approach this volatility? I know that for your chat members, you break it down, for them, but we have a lot of people here that are asking about the chat room, and they want, just so they can get a touch of what you do. How would you address this volatility for this one particular case?
Well, two ways to answer this. Number one, with those some of the meme stocks is like, I look totally at the and our chat room is not. We're not throwing rumors around. Hey, I heard this, and look at. We look at on a short-term technical basis. If things get really extended or really oversold, then we like it, or breaks out, whatever. Technical analysis. We're not there trying to push a million people into a stock, or a million people to short a stock or sell a stock. That's just not what we. So it's a different chat room than some of those other ones. But here. So I really try again. Some of those other chat rooms are trying to get people to the greater fool theory. It's like, well, we'll just we'll keep pumping it up and sell the other suckers at a higher price. We're trying to make some educated calls here. But on as for this one in particular, you just the key thing for these things is to use stops. If you own a stock, especially you leave a little bit more room when you own an option, because you have to put a lot less money down when you buy an option, obviously, because because the returns can be so much more. But if you buy a stock, you do not ever want to lose more than 10%. You buy a stock, and it's like it may be a great buy a week from now, a month from now, 6 months from now. I tend to lose my stop losses at the 5 to 7% range. You just want to get out of the stock. But 10%, when I do tier 1, tier 2, it's like, hey, it drops 10%. You want to exit the trade. We've timed it the wrong way. Now, if the stock rallies a lot, then we can give it more room. If the stock's up, Microvision stock's up 400%. I'm not gonna, if it drops 10%, I'm not gonna worry about it because I think I like it really long term and it's already up a lot. But you can raise your stop, but I'm not gonna leave my stop at $2.68. It's rolled up a long way. We don't want to give away all of our gains. So that's why we've traded around it. But the point is, when you get into a stock, an AMC, GME, any of those names, if it's down more than 10, getting down to about a loss of 10%, get out. You will have losses. You will have stocks that loss. The key thing is to get the nice big gains, the 20s, the 30s, the 40% gains, and more than that, or the 400% gains, and more when in some of the options. But those work really well because you are going to have some losses. Nobody is perfect. The good batting average is the guys that bat 800. You're not going to bat 400 or 300 like a real good major leaguer. That's not very good. But if you bat 700-800%, or even 600%, and those ones are nice big gains, and your losses are limited to 5, 7, and 10%. That's how you make it. It's the people who keep adding to their losses. I'll buy it cheaper, and eventually go up. Again, at that point, you're just using hope for a strategy. That's not a good strategy.
And and that's really what I do want to point out. As retail traders, let's be honest, we don't know what we're doing. So we're buying these meme stocks and we're doing all this stuff that honestly, because we're just following a Reddit board chat room. And from my personal experience, I can tell you that is the perfect recipe to blow up your account. And you don't want to do that. You want to get the education from a verified mentor. Matt Maley, he's really like the ideal person that you would want to do this with. And in the chat room, he breaks this down every single day. So I see some questions about payment plans. Shineru, email me or call me and I'll work something out for you. I know a lot of you guys want to join the chat room. Trust me, I wish I could ask Matt questions all day, but I have to help you guys out here too. So yes, you will be eligible for a laptop. We still have some laptops left. And I know a lot of people in the chat wanted to hear about Neo. So Matt, if you do have some time, Neo, and just to briefly go over this, Matt is using a Bloomberg terminal. Bloomberg terminal is about, like $4,000 a month. This is really what equity firms use around the world to have top of the line data and access to global market news. So that's why he's, up to date on everything.
On Neo here, and what I'd say is I do have to run shortly, just so you know. I would like to just go over a couple things after we do Neo on the because I know we were asked at the very beginning about the indices, the major indices. So I just wanted to touch on on the Russell 2000, the S&P 500, and the Nasdaq. But Neo, it's kind of interesting. This is at a key. I love the fact this is one back in here. I was like saying, this is just not good. It was overbought way back in here. Again, there were some sentiment things that I look at. The other technical analysis that I looked at looked like it was getting very, very stretched. And so that worked out very well, staying cautious here. But look at this. It's been able to hold its 200-day moving average. It broke below. It looked like, this is a big problem. Again, people said, look at that, negative cross. It's a death cross. It wasn't a death cross because the 200-day moving average is still rising. This was a deeper head fake than you usually get. Usually when it falls this much, it keeps going down. It didn't, though. And it bounced back nicely. But again, it got oversold. So we knew there. That's why I'm going to say, when it got down to that level, I'm thinking, geez, I don't want to bail on this thing. Yes, because look at how oversold it is. Now it's breaking back up, got back above its 200-day moving average. It looks like its 200-day wants to cross back above its 50, and they're both rising. That's going to be very bullish because that is a legitimate golden cross. Let me go back just a little bit here and see the last time they had a golden cross. Okay, look at the last time it had a golden cross right here. Look what it did. Again, meme stock, that had a lot to do with it. Maybe the stock won't rally that much, but it gets a golden cross. It should be quite bullish. And let me just see here. Okay, again, so you can see a little bit better. Again, neutral. It's not overbought. It's not overbought or oversold. So the fact that it came down a little bit the last couple of days, it's still holding both as 50 or right around as 200. If as long as it holds that level, and then I put a key stop at $40 because you see it gets below 40, it's going to be a lower low. So you buy the stock here. You have because on the bet that it holds these moving averages and it trades back up to at least its highs at the beginning of the month. So that's kind of my call here. I love the fact that it's come back down, but not from a very oversold level. So that gives it a chance. I'm sorry, a very overbought level. Was not overbought. So this could easily bounce off strongly. The outlook here on a near-term basis anyway looks good. And I'll tell you one thing for sure. That's the thing. Don't be afraid to add. I'm going to go back into this thing. Here, if we get above this level here, okay, $55, that will give us another higher high. If we already got one higher high, that would give us a higher low, and then another higher high. It will show that this downtrend, that was multi-month downtrend, that would confirm that it worked. So if you buy some here, don't be afraid to buy more once it breaks $55. Remember that thing I talked about just a few minutes ago about adding to these big losses? There's nothing wrong with buying a stock at $43.99 and buying more at $43.75. I mean, that's fine. You're buying, it's really kind of in the same area. You're adding to it, and that's fine because you never get the exact level you want each time. But once it starts going down in a meaningful way, get out. Just, it gets down 6-7%, get out and live to fight another day. But when something's going up, too many people sit there and say, "Oh my God, I should have bought more at 44. I had my chance. God, why didn't I buy more?" And then they don't buy it when it goes to 55, when it breaks above 55. But think about it. If you buy something at 55, you buy something here at $45, and you then buy more at $55. So you buy 45 and then 55. Your average is obviously 50 cents. If you buy the equal amount, your average is $50. But you've got a winning trade. It's $50. You own it at $50. It's trading at 55. So you're adding to a winning trade. Now you raise your stop to that $50, and you can't lose money. I mean, unless they make some weird announcement that it could happen in this stock. It could gap lower, you lose a little bit of money. But in most cases, it gets down to 50. I'm out. I don't have to pay a commission on my stock anyway, and it costs me nothing. So I'm in a win-win situation. I almost certainly can't lose money. All I can do is make money. And then as the stock continues to rally, you raise that stop to guarantee that you make money. And so many people have been taught, I'd buy this on weakness. Yes, it's good to buy us on weakness if you own it. You buy a stock and it goes from 20 to 50, and you add to it when it drops down to 40 because you're still in the money. But people who are adding to losing positions as they go down get creamed. And the people who don't be afraid to add to winning positions. Yes, your average price does go up, okay? But two things. Number one, you're adding more to it, so your profit on a total basis will still be much higher, and your tax percentage won't be as big because your price will be, your entry price will be higher. So your tax burden won't be quite as much. Don't be afraid, especially when you get a really oversold stock that really, last year when we had the big sell-off from the pandemic in March, people started buying, and people should have just kept buying. Don't be afraid to add to those positions. They'd be so much better off, but they're like, geez, I wish I had bought more. We always wish we'd bought more. We never get the exact bottom. We never buy as much as we should have. We never sell the exact top. Don't worry about those things. Don't be afraid to add to winning positions. That is really the best way to take advantage of momentum trading. I kind of rambled on there a little bit there. Sorry, Rodrigo, but it's just a key tool that most people spend too much time buying on weakness when they should just be getting out of losing positions, and not enough time adding to winners when they it's just something that really works out very well.
Matt, you got Neil here now. Rodrigo is still present, but I think that tenet of good trading, good positional and swing trading, whatever the hell you want to call it, add to your winners, let them run, just watch your levels, is something that I hear from you all the time. And you guys are getting that in the chat when you're in there. That is where you're getting the touch and go mentorship with individual trades. Where it's different from if you sign up for some Telegram or some Signal subscription or something, someone's going to send you something over that. Very impersonal, not trading with a group. Add to your winners, cut your losers, move on. Matt, that's the note that I think we should end on.
Okay.
So thank you very, very much, guys. Don't go anywhere, chat. Don't go anywhere because Rodrigo and I are going to stick around. We're going to answer some questions about the chat and some basic stuff about technical analysis and any questions that you have about the subscription. Now is the time to get them in. But Matt, thank you so much for being with us today and have a wonderful Sunday. And I can't wait to be with you in the chat room in the week ahead.
Sounds great. Have a great one. Good luck to everybody. Have a great rest of your summer. And remember, the fall is really going to be time. We're going to make even more money in both directions because there's a lot more ways to do it than there were the last two times the markets. Again, I'm not calling for a major bear market like that, but we could see a decline and we'll be able to take advantage of it, which I'm really looking forward to.
Very exciting stuff. All right, Matt, take care.
Thanks, you too.
All right, guys, that was Matt Maley, author of Benzinga Stock Picks. You can get into his chat room still half off by clicking the link in the chat and down in the description. That's still available for you. Highly recommend joining. 14-day money back guarantee. You don't like it, you get a refund. You know, trading together is better. Matt knows his stuff. That's someone you want as a mentor. Matt is the man, Barry. That is for sure. That is for sure. Yeah, we didn't get as much of an index overview as I had hoped for. We got a lot of questions about individual about regions. We got questions about emerging markets. We got questions about different asset classes like crypto. We didn't get into our index overview, but you can absolutely rely on getting that every morning from Matt in the chat room. So congratulations. I just want to give another congratulations. There's a few in here that I don't know because I go off the email addresses when I shout these folks out that have just joined us. There's a few that are not words, but VN, welcome. Congratulations. And then we're approaching, it looks like we're just shy of 25. I'm just eyeballing it. So the room is getting big. Congratulations to everyone that just joined. Welcome to the family. You're going to love it. And there's the crowd. There you go. There is your Olympics 2020 crowd going crazy. Okay, guys, questions about the subscription, about the chat room that I can answer for you. We did just add some trading tools to the chat room so that as you're getting picks from Matt, so you're going to get picks from Matt. He's going to tell you what he's trading, entry price, stop loss, target price, when to get in, when to get out, options strategies for the up, for going long, for going short. Everything applies into every market. But we've also added some trading tools so that you can do some technical analysis. We got a complete chart from TradingView embedded in the chat that you're able to use. If you have a particular stock that you want to get a question answered on, you're able to just do a screen capture from that chart and then drop it in chat and say, hey, Matt, what's the deal with this chart? Can you help me? Is this a golden cross? And you're able to do that. And yes, if you liked that golden cross, death cross strategy, I mean, I think that's cornerstone. That in my personal trading, that's one thing that I've gotten from Matt that I use all the time. You are able to construct that in the chat room with the trading tools. Rodrigo, how we doing?
So, I mean, I'm doing great. I'm just pumped to have Matt here, giving all this information. I just got so many questions like, hey, can you have Matt this and that? Like, the man's in the chat room grinding all day for you guys. And this is what I'm talking about. Volatility. That's the name of the game. Volatility will take you out or it will make you. Now, you don't want to guess with volatility, right? But Matt is able to trade in volatile markets, bear markets, bull markets, choppy markets, Federal Reserve controlled markets. The man has been doing this for so long. Like, he knows this better than, I know the palm of my hand. So that's really, it's beyond experience. It's actually the doing of it, the living of the market crashes, the living of the policies that change different investments and all that stuff. So, there's no way that you're going to cram 40 years of market action. There's just no way you can just cram that up. So back to the point with volatility, these things, a stock will go down 20%, 30% in a matter of minutes, Neil. You need to have access to somebody with the mental resources to be able to ask him and get an educated decision. right? It happens when suddenly we wake up and guess what? A stock gap down. We don't know what to do. We don't, I mean, we just don't. So ultimately, that guidance is really what helped me a lot. Being able to talk to Matt, ask him questions, the technical analysis he brings to the table. You're talking to a chief market strategist, guys. I don't know if some of you guys can really fully comprehend what Matt does. This man moves a lot of money. So he knows what he's doing. So let's just, I just want to give the man credit for where he is. He's worked hard to get there for sure.
Yeah, he can be very unassuming, but there's a lot of the decisions that he makes affect a lot of people's money. He's also, if you guys watch CNBC, he's on there frequently. That was how we met him. It was like a mutual like media type thing. It was like Benzinga and a bunch of other media companies. And so we got introduced to Matt and got to talking. I met Matt like over a year ago, Rodrigo. And we just started talking. He's like, hey, I deliver a newsletter. He just did like one like bit. And if you've seen Matt's writing, it is just like, it's monolithic. And he will just dump ideas. Like you could tell this guy started learning to type on a typewriter, but like he would just dump ideas, and he has this letter that funds pay for. So that's how he was making money on the institutional side is they were paying for this daily and a weekend. So he had like a weekend update and a daily like sort of morning update with all of his fundamental macroeconomics, the landscape, all of that stuff. And he was asking us like, well, is there any way that we could provide this information for retail traders? And we're saying, well, the format that it's in right now is a pain in the ass. Like, I'll be honest. Like, I can see like a hedge fund would just have like 6 traders sit there and pour over your stuff. But yeah, if you work with us, we'll break it into a format that's easier for people to understand it, and let's do it. And now we've gotten to the point where we've just got him in a chat room. He's providing that morning update every day. He's providing the weekend update to folks. But we break it down so it's a little bit easier to read. And then you're able to just ask him questions. Direct access is the number one thing here. Even the institutions don't have that. Right. What were you gonna say? Oh, and there's and Brett P has a question here. Can we do a payment plan for the chat room? I'm assuming you got to talk to Rodrigo to work that out. We are working to get like Klarna or PayPal like payment plans. You've seen those things when you buy stuff online and they say, would you like to pay in 4 installments? Or we're working on getting that, but they don't really they haven't adapted to subscription models yet. So once they release those, we'll introduce those. So I wouldn't wait on that. But Rodrigo can work out something that's manual with you if you want to do a payment plan. That's totally fine. But we keep it annual because this is a lot of Matt's commitment. So we want a consistent group of people in the chat room, and we only want people that are going to be committed to actually trading and actually doing things, because that makes the chat room better. If you're not serious about improving the way that you're going to make money in the markets, if you're not serious about having a secondary income, a tertiary income, or even this being your primary income, with this, which is 100% what this is built for as well. If you're not serious about that, that's fine. This is not for you. That's not for you. You can do whatever you want on your own. This is for folks that are serious about actually playing in the markets. And playing is not even the right word. Using the markets to make money and grow their portfolio. And then AP is asking me, Neil, do you have any recommendations for self-study technical analysis? Only textbooks. And I would say the best one to start off with, AP, is going to be Technical Analysis of Financial Markets by John Murphy. And then you can just go from there. And for those of you that don't want to read textbooks, for those of you that don't want to, which, by the way, that textbook is like $90. So if you want to buy one copy just for yourself, and if you finish it, good for you. I read it because we had it at the Benzinga office. It was just there, so I took it. I steal from the Benzinga office all the time. But if you don't want to do that, that's what this chat room is for. Learn to trade while you trade, earn while you learn, and then also trade together, right? That's what this is all about. I also want to give a shout out to Asi. Asi, welcome to the family. I think, Rodrigo, if you want to go ahead and do your thing there. Asi, thank you for joining the Inner Circle chat room with Matt Maley. I will see you there. You are going to be very, very pleasantly surprised with how this is going to change your results in the markets. 100%, I guarantee it. And we guarantee it so much, guys. If you're not pleased, if you don't like the way things are going in the chat room, 14-day money-back guarantee. You've got 2 weeks of trading to decide whether or not you want to stick around. No questions asked, money back. It's as simple as that.
Neil, I want to touch on. Sorry, go ahead.
Well, I was just going to say, AP wants a job at the Benzinga office. Email Spencer Israel. Here, I'll give you the email. So email Spencer Israel at benzinga.com. And then what's that, Rodrigo?
I just wanted to touch on a note here, guys, that, I mean, just to tone it down here and just hover over what really matters here. Remember, money is a means to an end here, right? You're trying to do something with your money. You're trying to buy a car, a house, pay off debt. I don't know. We all have different things, but ultimately what I'm trying to say is that it's not easy to become a successful trader, but even if no one else sees it, you must see it for yourself. Benzinga represents an idea. It represents possibilities. It represents opportunities. So you want to go to the next level, you need to invest time, and you need to invest hours and hours in your craft. Like I said, money is a means to an end. So don't let anything get in the way of you getting what you want. So no matter how bad it gets, you have to think to yourself that you're going to make it. So invest in your mind, because this is not taught anywhere but here. And this is the first step that you're going to take towards financial education.
100%. 100%. And then what I like about this too is you guys saw from Matt's picks and from the way that he talked about a lot of your picks is you can be working full time. Like I use Matt's picks. I work full. Trust me, I'm here doing a webinar with you guys on a Sunday. And if you guys were at the boot camp yesterday, you knew I was there too. I work full time, and Rodrigo does too. We are hard workers at our day jobs. We love our job. I'm not complaining, but I'm still trading those swing and positional trades. When I get a hot tip from Matt on an options trade, I don't ask questions. I mean, I'll do my own due diligence because I'm like that, but I don't really ask too many questions. The man knows his stuff.
Neil, just remember this. And this is really when I was like, okay, there's something behind Matt. Remember in February 20th, February 19th, before the correction, Matt Maley doing the webinar here with us, calling it on a Sunday, calling out a correction on a Sunday. Next thing you know, well, just so you guys know, he sent out his subscribers, in the newsletters, alerts. These are not necessarily stock alerts. These are just alerts, commentaries. As you know, he's, a special guest on CNBC and Bloomberg, Yahoo Finance. Well, they ask him questions there, but that's not, they just ask him questions. Information that comes directly from Matt is what he does in the commentaries. So he's going to send you a newsletter probably twice a day or something like that, updating you fully on the markets. And that's where he pretty much pointed it out. He told all of his subscribers, tier 1, 2, 3, and we didn't have the chat room at the time, but basically he told them, raise cash, tighten your stop losses. I smell a correction in the corner, and we want to buy some good names. Neil, you remember that. I remember it. Do you remember it?
I do remember it. And I want to say that was like the fifth thing that he did where I was like, oh shit, this guy knows what he's talking about. Wait, so he just called like there's going to be a correction. He said like, look, it could be 5%, it could be 10%, be 20%, whatever your definition of a correction is, we're due for a pullback. And this is why. That's my Matt Maley impression. He did call it. He is absolutely right. He said he wanted to he's like, I got a lot in stocks right now. I'm putting it in cash. That went out to subscribers. All right. The XYZ trades that we're in right now, close them. We're going into cash. And that saved him, me, all the subs, a lot of money. And we were smiling while everyone else was crying. So that's one of the huge benefits. But that was one of a lot of things that Matt has done. That's really just kind of showed me, like, I can listen to someone talk about, this and this and that, but what they actually do in their calls make a big difference. MVIS, Microvision was a big one, a huge one. So he's just like, he kind of had like an inkling. I'm looking for something that's connected to electric vehicles. This is, I think, still during 2020. Was it during 2020? It might have been during this year. I'm not sure.
Which one?
MVIS. Microvision.
I mean, it's been on. We've been in and out. We've been selling near the top. We get it. So it's like it's a non-going money machine. Like Matt Maley, he's just a milk cow.
Yeah. So that's another thing that you get with this. It's not like here's a stock. trade it, we're going long or whatever, he'll come back to the same one and be like, all right, this one's about to go down. We're going to short it on the way down. I'm buying puts on this. Puts are up 200% on it. Get an alert. You'll get alerts from Matt where he's like, all right, we're up 200% on Microvision. I think that's enough. Let's close it. And we'll move on to the next one. And then, 3 weeks later, Microvision is looking like it's about to bounce off key support. It's oversold. Let's go. We're going to go long on Microvision. And if there are any subscribers here, you guys can definitely attest to that has been the case with that stock. And so it's not about like picking the right stock all the time. It's about knowing how to play it. And so that's been
and the fundamentals, because here's the thing. As retail, I'm looking at a chart, and that's really like the main thing I'm focusing on. You're talking to a chief market strategist. This person is reading industry forecast reports, getting reports daily, about forecasts on different industries. Ultimately, he is, his mindset, his mind, he's looking at 6-12 months ahead. So you and I might be thinking about trading a pop here and there, but the man does heavy fundamentals on these trades before you even get them. So these are fundamentally sound companies as well.
Yep, absolutely. So, okay, guys, questions, help us out. We don't want to talk at you.
Did we answer Asif's question about the laptop?
I couldn't see any link for ordering a laptop after subscription to Inner Circles. If you didn't see a laptop on the page, that means we're out. But Asif, if you did see a laptop, that means that we're gonna hook you up either way. If you didn't, just listen. If you got it, talk to Rodrigo. We'll make sure you get a laptop. End of story. All right, guys, you really want to get in now. I'm telling you. We're going to be starting Monday. A lot of the markets are kind of having exhaustion gaps, looking a little bit toppish all around, looking really expensive. Now is a very good time to start getting some mentorship and start learning how to really play this stuff. Things are about to get extra volatile. This isn't, this
record
isn't
highs.
for
Record highs everywhere. Dow, NASDAQ, SPY. What do we do? What do you do when record time highs in all of the indexes, and we have Delta variant being 85% of new cases, and we have states that are not vaccinating? How are you going to play this? How are you going to play the Fed getting involved, China and U.S. relations? This is really what it all comes down to. Like, it's hard for one person to do this. Luckily, Matt has resources as well. Ultimately, this is where I see the value, being able to digest all that information. I have not been 40 years in the market, so I do not know what will happen. I don't think the closest person you can ask is somebody who's been doing this for 40 years successfully.
You know who else is now subscribed to Matt's newsletter?
Who?
Carl Icahn.
Carl Icahn?
Did you say Icahn or Icahn?
Icahn?
Icahn? I don't know.
I don't know.
Carl Icahn called Matt like a few weeks ago. And said that he saw him on CNBC and he wants to get his updates because like he talks about like giving out his updates.
Yeah.
Do you guys give me a 1 in chat if you know who Carl Icahn is? Give me a 2 if you don't know who Carl Icahn is.
If you're new and you don't know, you really want to know who this man is.
Absolutely. Give us a 1 if you know who he is. Give us a 2 if you don't.
There we go.
We're getting some responses.
Colin, Shelly.
AP.
Yeah. Now, why it's also huge? Yeah, bunch of numbers. Neil, that next week we have a bunch of huge mega cap companies reporting. Tesla is reporting. You got some other big names out there. Yep. These are stocks that move the market. You want to go on tech Monday, be careful. I talked to Matt. Remember, we do have a 14-day money back guarantee policy. So you could, it's just, if you really don't know what's going on in the markets, you might think but ultimately your account knows better than what you think.
Yeah,
and
you don't. If you think you know, you don't know. That's for sure. No one ever knows. That's the thing. The market knows, and you respond. Absolutely. Guys, so now is a great time, is I think Rodrigo is trying to illustrate before I interrupted him. This is absolutely historic, with us being at the absolute top of the index, like each index topping out, and then us getting into earning season. This is all eyes on the field right now. So if
All eyes on Matt.
That's I would if I'm going to follow anyone right now, it for sure is going to be Matt. Benzinga Pro does not come with this subscription. The subscription is an active chat room with trade ideas and a charting tool. And Matt's mentorship. More questions, guys. Thank you for the question, Freddie. Checking in to see if anyone else has joined.
Yeah, and I have a couple emails of some people that are asking about payment plans. So, I mean, I'm willing to work with you guys. I am Rodrigo/Kiarna here.
Nancy, congratulations and welcome to the Inner Circle. You are going to have a very good experience. I guarantee it. You're going to get the full support of the Benzinga team, live support. You can't say that about most chat rooms, if any of them at all. You're not getting that on Discord. You're not getting blah, blah, blah. You're not going to get that full support. You're going to get Matt Maley's mentorship from here on out. You're going to get the trade ideas, and you're going to be trading with like-minded people. So congratulations, Nancy. Welcome, welcome, welcome. You made the right choice. Barry, I just signed up for the new education series yesterday. How much of an overlap would there be with Matt's chat room? I would love to be a part of it. They're completely different. Completely different. You can do one or both and be a very happy person. Completely different. Who makes the picks for the added newsletter? Twisted, let me know what newsletter you're talking about. If you can tell me the name of the newsletter, I'll tell you exactly how that works. We've got a lot of, I mean, newsletter is such an old term, but we have a lot of, like, we send content to people that subscribe to it. But if you'd let me know which one you're talking about, Twisted, I'll tell you exactly what's going on. J-Bay says, I can't pay for the subscription. Is payment plan possible? Rodrigo is here to make sure you are accommodated. We do a white glove service here at Benzinga, at the Benzinga Hotel. We make sure all of our tenants are taken care of, J-Bay. Candy, what time is the chat room open? Market open to close. Pre-market to aftermarket. Monday through Friday, and then weekends upon availability. Matt will also communicate with you. Like, Matt's got a family. He's a normal person just like everyone else. He'll always communicate with you like, hey, like this Friday I got to do a thing for my father or something like that. He'll communicate with you guys. So, I mean, this is, you're going to be trading with a real person here. How to reach out to Rodrigo. Rodrigo, do you mind dropping your info back in there?
Yeah, let me drop it right now, guys. And just so you guys know, I will be, I mean, I'm sure you guys already know this, but I will be hooking it up. And, I'll be reaching out to you guys after we finish out here. We have to do the Q&A because we get a lot of people that, ask a couple questions, and we just want to make sure that we can address, everything here. We have limited time with Matt because of, everything that he's doing, but we do the best to keep bringing you the education that you need. We really go hard on education because, if you don't get it, we all know what happens, and we're trying to change that. We're trying to help retail traders. Matt is ultimately the best educator that you can find, and he's naturally like teacher mindset. Obviously we have to limit the time here, but in the chat room you talk to him all day. So I don't know what kind
Irvington, welcome, and congratulations. Sorry to interrupt you, Rodrigo. I just want to make sure Irvington gets a shout out. Irvington, thank you very much and congratulations. You are going to love it. I will see you in chat. Let's trade together. That's what this is about. It is life-changing to have a trading group. I'm telling you, get that knowledge from Matt. Use it for all it's worth. When you're in the chat room, Irvington, ask questions about what's going on in the market. Follow his picks. Learn to trade the way that Matt trades. Come out of this thing a better, stronger trader, and then you'll always have a home to come back to where we are trading together. No more confirmation bias on your trades. No more, the technicals look good and I like what the company's doing. I'm going to go in for it. It takes 5 seconds to run it past the group and past Matt and you get a second opinion before going in on something with your hard-earned money. So Irvington, congratulations and welcome to the family, my friend. Rodrigo, I'm super sorry for cutting you off there.
No, it's okay.
I get excited.
I just wanted to like touch on this one point. So I don't know if you guys have ever done this. I've actually done this. I've walked into an equity firm before, and I just asked to talk to somebody there that's not like a, like the junior level associate. You try walking into a private equity firm. You tell them you want to talk to the chief market strategist. I bet you'll be taken out by security in 5 seconds. These are people that unfortunately are out of as retail traders. Look, Matt is basically what you call smart money. Okay, let's just get down to the point. This is smart money. This is somebody that's managing a lot of money for a fund, and ultimately, like that is, who loses the majority of the time? Retail. Who doesn't?
Always.
Big firms. So why don't you just try trading with the people that make money, right? It sounds like so easy, but it's not easy because they don't give you that access. We have to get an approval to get Matt on this chat room. You don't just get these kind of characters, and stuff like this. We have to go through months and months of, figuring this out with Matt due to him being a chief market strategist. But you know what? We did it. We came through, and now you have access to him 24/7. So I would take advantage of this because honestly, like I said, try walking into an equity firm and asking to talk to the chief market strategist. You can't do that. You having access to Matt 24/7 for this insanely low price plus a laptop and a community.
Mm-hmm.
You're getting, this is a steal, guys. I'm just being honest. Like, this is a steal. So I don't know until when this is going to be active. It expires at midnight. Typically it does, but you don't get these kind of deals out there.
Yep. I just want to go back in on this access to Matt, him being the smart money. One of the number one breakthroughs that you can have as a retail trader is learning to think like an institution. Learn to think the way the institutions think, because they are what are who are and what, if you're talking about algorithms and automated trading, which is becoming increasingly a large portion of what's driving price action in the markets. Learn to think the way they think, because they are driving the markets. You want to trade with that. They are the current, they are the tide. Even if you're taking a contrary play to something, like in the case of a short squeeze where you're taking a contrarian play against them, you need to know how they work and how they think. That's what Matt is giving you here. That's what the access is. Matt's the only one that we have that is doing that. He's the guy that wrote the letter for institutions. He's the guy that Carl Icahn called, literally got his number. I don't know how he did it, but he's Carl Icahn, so he could probably get anyone's number on the planet, and said, do you have any type of content or newsletter that I can subscribe to and read every morning? This is Matt Maley. This is who we've got. We're lucky enough to be working with, and we're trying to hook you up with him in a chat room so you can trade with him. Get his trade ideas every day that he drops in there. Get his understanding of what's going on in the markets. Stop wasting your time with trying to read a bunch of textbooks, watching YouTube videos or pre-recorded made 2 years ago, all that kind of stuff. Live market action, understanding things the way an institutional trader understands them, so you can have a disciplined capital protection, maximum profit approach to the markets. That's what this whole thing is. Just once again, congrats to the folks that have joined. Freddie P's got a question here. Will the annual discounted rate automatically apply to next year? Yes. If you sign up today, the half off, 50% off the subscription rate will last for the lifetime of your subscription. No questions asked. Absolutely, Freddie. And that's a very good question. So thank you for asking that.
I want to do a quick walkthrough just to give the guys something I lived through with Matt's picks. So this was when the markets were we were still in correction mode about a month ago, I believe, when he put out that Viacom weekly put. So I just want to emphasize this, right? I don't know like what Matt saw, but he obviously has he's been doing this for a while. So A lot of people know him, and he knows a lot of people. But this Viacom trade just really stuck out because Matt sends out an alert, and he trades volatility. He benefits from volatility. Some people just stay there and don't do anything. Matt profits from the volatility. So basically, he was looking at Viacom and said to buy weekly puts, not monthly puts, Neil, not 2 months out, not 3 months out.
It's aggressive.
Weekly.
Yeah.
That is very aggressive. Now, this came out about noon or 1 p.m. And I remember this like it was, The Big Short. And so I'm like, okay, weekly puts. Well, damn, Matt, what do you know, right? Okay. All right. So I go through the trade, and suddenly at 4 p.m., about 4:30 market close, Viacom does an offering. Holy smokes. Thank you, baby Jesus. This is what I'm looking for, right? And then not only is there an offering, stock's already down like 30%. So those weekly puts are banking. But then you have the Archipelago, remember the family trading office that was over leveraged and had one of the biggest margin calls in history? All over CNBC, all over everywhere. Basically, lying to investment banks, telling them, hey, I only have this much, but in reality, they have $5 billion borrowed from the other bank, and they're not disclosing that because family trading offices don't have to disclose that. Well, Matt Maley on point. Next thing you know, family trading officer Archipelago does get that margin call. Stock tanks from $94 to $40 around there, 38. So he sent the sell alert. But here's the thing. Matt sends a sell alert at 2,500% lock profits. I wrote that down. Like I'm
2,500%.
Yes, 2,000. That is the biggest gain I've ever had and I've ever seen. And coming from a chief market strategist, not from so yellow Reddit play. Okay. So if you would have taken that down all the way down to 40, your weekly puts would have been up like probably about 5,000%. So I mean, that was a life-changing pick from Matt. So, of course, I do remember it every single day. So, I don't know. The guy knows a lot of things. He knows a lot of people. A lot of people know him. And you do want to trade with the people, like Neil said, trade with the flow. Don't trade against the flow.
Yeah.
That's simple.
Yeah, I love that about Matt's picks is, we're shooting for double-digit percentage returns on every trade.
Mm-hmm.
But every now and again, he's just like, let's go for options on this one. Let's calls or puts. Let's go. And then we'll get the text. So you're on the team, Ryder. We go, so, we get the text or like the email notification. That's like, we got to notify subscribers right now. Take profit. And that's, Matt's amazing.
And he sends out the sell alerts. So, I mean, this is really why I think it's complete. He has the commentary, which gives you the overview of the sectors that are moving, what's not moving. If there's any news that really is moving the markets, sell alerts. I mean, in the tier 3, we have conference calls with Matt Maley. The chat room is where it's at, to be honest. I don't know anywhere else that you can have direct access to a chief market strategist and get an answer in a couple minutes. I just don't know, man. Tell me where it is, because I don't know another Matt.
No, this is really special. I know there's so many bullshit subscription services out there. Straight up, you guys already know. You see ads all the time, and they'll say like, I worked on the trading desk, blah 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 blah. There's a lot of bullshit out there. Matt's legit. He knows what the hell he's talking about. There's a reason he gets called on to all these meetings. He doesn't get called, like he doesn't just work with us. He gets called on to CNBC. He's on television. He gets called on, and all, like you guys saw him talk about Japanese markets. He talked about Indian markets. He gets pulled.
He knows all that.
He knows all that, but he's also on their like equivalents of like Bloomberg or Benzinga or CNBC. He's on television in those countries too, talking about all those things.
He's worldwide. He's got a following global as well. Yeah.
Yes, and he's kind of who like networks go to when they're like because when the market is going down or up, at the end of the day, the media outlet needs to be able to say, Dow Jones down on COVID fears. Like, and they need like a reason afterward. And when they don't have a thing, Matt's the one they call in to explain things. And so he's very, very good. I mean, that's the broad past, present, future awareness of what's going on around the globe in financial markets. And it's like indispensable for a well-rounded trader to have that knowledge.
And honestly, I just feel that's the gap, Neil. I feel that there is a gap between retail trading, and it's understandable because it's not easy to be able to comprehend all these things, Neil.
Right.
It's difficult to understand different economies, different Federal Reserve banks, understand the situation in other countries, not just political, but economical, and all these other things, how they impact different sectors and industries. I don't expect the retail trader to know all that. I just don't. Matt Maley's coming right from the equity firm, baby, with all the resources, and they got a lot more eyeballs that do have the training, that do have the resources for this, and literally he just packages it for you guys, for retail. So that's why I like it, because he's helping the little man. That's why I like him.
Yeah, I mean, if you have a trading account and you're serious about trading, I think you're crazy if you don't sign up. Like that, it's a 14-day money back guarantee. If you don't like it, get in, get out. You know, I think you're crazy if you don't sign up to grab half off of this thing. It's just a sick deal. Just a sick deal. Shelly, the merch, we dropped a coupon code in the chat. So if you scroll up, and it was the first 10 who use it get to use the coupon code, which is like a gift card code credit towards stuff at swag.benzinga.com. Scroll up and see if you can still use it, because sometimes people don't use them when I drop them. Like we'll get like 2 out of 10 people using it. So go for it, Shelly. Shelly's asking about the reward that we gave earlier for participation. As always with these guys, we reward asking questions. In fact, if I can get 10 good, unique questions, 10 thoughtful, unique questions about the Inner Circle chat room with Matt Maley, I will drop in a $50 gift card code for the swag store. So if you want a new jacket, you want a new hat, you want a new t-shirt, couple new t-shirts, that's how you're going to get it for free from the swag store.
Neil's hooking it up, guys. This is historic here, guys.
We're making it rain here, guys. All right, we reward participation. This is all about community trading together, rise of the retail trader. We are here to facilitate that. If it takes putting a gift card code for for our swag store, I am more than happy to do that. J Bay, really good question. Sorry if I missed this. Does he focus on daily swings or long-term investing? Errs on the side of swings, but does both daily and long-term. Absolutely. If there's a play that he sees, he alerts his subscribers to it and gives instructions. All there is to it. Rodrigo just gave a great example with Viacom puts. Based on just like something that came up. Matt saw it, notified everybody. Over 2,500% gains on a put. That's an options contract going short on Viacom. So when you see something, that you want to be in the chat room for it.
But the thing is, these are not just trades, Neil. These are trades that are vetted by Matt Maley, reviewed by Matt Maley. So ultimately, even if you have a part-time job or a full-time job, I get where it can seem overwhelming. How am I going to do all this damn research and learn international markets and international economies and international politics and how they interact with different business sectors and how that translates into the U.S. markets?
Yep.
You know, you don't have to. You got Matt Maley. He's not going anywhere. He loves you guys. He loves his subscribers. He loves giving you guys updates. We have a different relationship here because ultimately, like, we empower you to make money, to change your life. And that's why we enjoy it, because seeing the results, having Matt, not only seeing them, but like doing them myself. So I've been trading Matt for like 7 months. So I'm talking to you firsthand as a trader, which is what I do besides Benzinga. So this, what I talk to you about, this is coming as a trader. I didn't have this stuff. So since I've had it, it's been a change. But, you know, you have to go through the steps, Neil, the education, asking the questions. Don't be shy. The people that go far in life are the people that sit in the front of the classroom and ask the questions and learn the most, not the people that sit in the back and don't interact. So when we say ask questions, interact with Matt, ultimately it's because we want you to get those doubts out of the way. You want to learn, but we're trying to encourage you to ask questions, because we know that, some people are shy. And look, I was shy in high school, but I just wish I wouldn't have been, as shy, because I would have gone out and asked more questions and learned more. And that always helps.
Yep, absolutely. And then here's another thing too to think about this. In your trading, you want that forward posture. You want to be sitting forward in your seat, ready to find opportunities. That's the same attitude that makes it so you ask questions. If you don't know something, ask. That's what this chat room is about. But also, when in your trading, in your investing, if this is a secondary stream of income or your primary source of income, you are running a small business. You, as a business owner with your portfolio, want to invest in the things that you need to grow, to build revenue, build profits. All right. And we are trying to make this so that your profit margins are as fat as they possibly can be. All right. We're getting you in at 50%. It's less than $2,000 a year for a full trading community with daily trade ideas from an institutional analyst, chief market technician that is providing this stuff to you. That is the investment that I think that any beginner trader or anyone, like anyone, I mean, Carl Icahn, like I said, subscribes to his content. So like from the beginner to the icons of the world, this is an investment in yourself, an investment in your small business. And the idea here, hey, we're pricing this. I'll be honest with you. We're Benzinga. We've got a lot of things going on as an organization. We're a large platform. We've designed this to be the best offering in its class. We wanted to have the best price, the best experience, the best customer service, the best people, the best authors and mavens and chat mentors. So that's why we have Matt Maley. So that's it. I mean, this is the best price I think you're going to get for this value ever. And that's just something that you should invest in yourself. Did Carl Icahn get a laptop? Nope. No, he didn't. And guess what? He pays full price. All right, AP. Thanks for tuning in. Carl Icahn did not get a laptop.
Did we get to IC Smith?
IC, can the chat help with other strategies such as portfolio diversity or other types of markets, i.e. futures? 100%. I think that this is the best one for that. Yeah, 100%. So portfolio diversity, general, like that's where Matt's experience instructing, instructing fund managers and other types of private equity firms comes into play. 100%. If you can ask, you can say, like, in 2021, what does a good portfolio look like? Is it 20% tech? Is it 50% tech? And he'll say, like, well, in 2020, I would have said you want to have at least 40% tech because it was ripping. But look at it right now. I think that you should have, some exposure to, emerging markets and so forth. So yes, 100%. This is the chat for that. And then other types of markets. Yes. Matt's out of everyone that we work with, Matt has the best understanding of macroeconomics, different markets, emerging markets, US, European, Asian, you name it, as well as different asset classes.
Commodities. Commodities. 2 years ago when nobody was talking about commodities, and you have stocks like US Steel, Neil, that now we're looking at when they're 24, and Matt was pounding the table when they were like $3, $4. Yep.
So the answer is a resounding yes, I see. Yeah, and cryptocurrency too. No problem. If you were here earlier, he just as easily will talk you through what's going on with Bitcoin as he will with what's going on with whatever.
Yeah, the thing with Bitcoin, Neil, is that it's not only, some people are like, oh, okay, it's Bitcoin, it moves by itself. That's not true. Bitcoin is there are regulations, not just in China, like right now, that took down all of these coins down, but there's also regulatory powers in place in the US with the Federal Reserve. They also are looking into their own type of coin. So ultimately, Bitcoin is not just, for the people that think about it as a payment system, but there's also government involvement in Bitcoin. And that's really where Matt Maley comes in. He would be the only person I'd ask about Bitcoin, to be honest, because it's not just Bitcoin, it's the Federal Reserve and Bitcoin.
Yep. Yep. And sometimes he surprises me. A lot of people have said, "Oh, Bitcoin's dead. It's way too volatile to ever work for the things that people said it would work for. It's not working as a." Yes, Matt. He's like, "Yeah, no, Bitcoin's still in play. It's just down right now. You know, like it's finding its bottom. It might go a little bit lower, but it absolutely like here's what people are talking about. Here's what governments are talking about. Businesses are talking about doing. And he'll tell you if he thinks something's dead or if he thinks it's alive. And he's someone I absolutely trust on that."
Well, basically, it all comes down to learning Matt's thought. I mean, you might have a hard time doing this, but learning Matt's thoughts process, it's going to be hard because of I mean, you can see the guy. He's really quick on his feet, but ultimately, you want to do that. You want to trade with the institutions. Don't trade against the institutions. Don't go against the flow. You have to go with the flow. The markets are too big for you to have any impact. So you're literally just riding the waves. You just have to know which ones to ride. And that's why Matt is your institutional analyst filter that you can use, basically. Does my trade make sense to a chief market strategist?
Yep. Don't pass up on the opportunity to have that. Seriously, not for half off. Don't pass up. If you guys need the link to get into Matt's inner circle,
I'll throw it down there. And
okay,
I got some emails there. So I don't know if you're still watching. Logan, Brett, Jay, and Millet, Mike, Candice. I will get with you as soon as we get off here. Don't worry. Benzinga has support all day, every day. We're here grinding for you. We don't stop. Why? Because we do it for you guys.
Yep, and we are just like you. We trade. We're traders. So, I think we talked about this a little bit personally, Rodrigo. But I'm super stoked to be able to give you guys the stuff. I'm so glad that I work at Benzinga and I'm able to work with people like Rodrigo to give you guys the things that we didn't see existing in the markets before. So it's great. Like we're just a couple geeks like you guys trying to make money in the markets. And we work at Benzinga, so we're trying to build the stuff that we want. That's what this is.
I remember about 2 years ago, Neil. I mean, and ultimately, I didn't know where to find resources. So just like any other millennial, I went to YouTube and I'm like trying to type in like stocks or stuff like that. And there were like other channels that I went to, and honestly, like first of all, nobody answered my chats at any point, so I was totally ignored completely. You know,
I'm sorry for laughing.
Well, I mean, that's my journey, and I'm pretty sure a lot of you guys can relate about that. It's unfortunate, but hey, it always starts rocky. So, I'm there trying to get information, trying to educate myself on YouTube, right? That's how desperate I am because I want to make money on the markets, and I don't know almost anything, right? So I wish I had this kind of education. As you can see here, we're doing Q&A, going over every single thing. Like, don't, other places, they might ignore you or whatnot, but Benzinga does have the capacity to help you and in ways that you really didn't even think of before. So now 2 years looking forward, being here at Benzinga, really my goal here, Neil, is to be able to not only help retail traders, but push this information out there. That's why we do this every day, because I don't want other Rodrigos out there making mistakes, trying to find, the education from the wrong places. So I wish I had Mike Maley. I wish I had all these other great tools that we have at Benzinga. I'm just glad that I found it. So listen to somebody who went through those struggles. If you're here, you're at the right place. You came to the right place. You're talking to the right people, and you're going to be learning from the right mentors.
100%. And Chinedu, we didn't forget about you. Rodrigo just needs to get back to you.
Chinedu, yeah, we're emailing back and forth. Don't worry. I got you, Chinedu.
Okay, Rodrigo, I think that this is going to be our last call. We'll stick on for 5 more minutes. And I think we got 1, 2, 3 thoughtful and unique questions about the subscription. So that means we need 7 more, and I'll drop in that big fat gift card for the swag store. Don't be old Rodrigo, be new Rodrigo. So we're rewarding the participation, and then otherwise, last call to get in on the deal, 50% off. Inner Circle chat room.
This expires at midnight. So if you see this tomorrow at 3,600 or 3,800, my hands are going to be tied. So at least get in touch with me so that I can try to save your spot. As you know, we are limiting here the cap for this. Obviously, we do want to keep the group quality up. So,
Yep.
Just make sure that you can get your spot at least, because, not everybody's getting at 50%. I'll tell you that.
And that's coming soon. Like, I don't know what number we're going to cap it at. I think it's going to vary depending on the people that are in there. But it is going to come soon.
Yeah, ultimately, people like Matt, really, that do have that halo effect, and they do know a lot about the markets. Really, that's a real mentor. You really don't know what you're getting into until you have a mentor. I wish I had a mentor. You know who my mentor was? Just big losses on my account. That was my mentor.
That's one way to do it, though. That's a real mentor. It's not the nicest way.
It's not the nicest way, and ultimately, that's what we're here for. If I would have had really Matt's education, or like just have him there to ask him questions, probably wouldn't have done a lot of stupid trades that I made. I mean, as a rookie, you're gonna make mistakes. Let's get this out of the way, guys. If you are new to trading and you don't know what you're doing, you will have losses. You will fail in some trades. How can you avoid that? You get with Matt Maley, the mentor, chief market strategist. Don't go through the rocky roads, because you're just going to be weaker and have less money by the time you learn. And those are the facts. So the sooner, the better, because you get to build on that education. Let's say, you go from kinder to senior year, you're missing out a lot. And for you to try to catch up there. So it is a process, but Matt Maley will take you from beginning to where you want to be. Ultimately, I don't know a better mentor than a chief market strategist. I don't.
No. And Rama, welcome. Congratulations. Rama just joined the Stock Picks Inner Circle chat room. You're going to love it, man. I always say, man, like, I gotta stop talking to people like that. You're going to love it, my friend, Rama. Welcome to trading in a group. Things are about to be different. You're going to love it. You're going to have live support. You have any questions from support, you ask them. Just congratulations. I'm very happy for you.
And ask questions. Please, we joined the chat room. Talk to Matt Maley. Ask him questions. Don't sit at the back of the classroom. This is your second chance. I don't know where a lot of you guys are coming from. I don't know what kind of struggles you've had, but I can tell you one thing. If you are here, this is your second chance to start learning how to make real money. I don't know your background, but I know what trading can do. It can change lives for the better or the worse, which is why you want to align yourself with the people that know how to trade. So this is your second chance to get something going, to get another revenue stream. See, the richest people in the world have about 7 streams of revenue. This could be your second, third, fourth, or fifth. I don't know. But you want to make it a revenue. And that's why you eventually join the chat room and talk to Matt. Like, trade with the institutions. Don't trade with the 90% group that loses money. It's almost this is like pretty common sense to me at this point.
Yeah, I know. I mean, yeah, we can say the same thing. Like, for us, it's common sense because we get to see the results. We're trading it, so it's like, for us, it's obvious. But we're just trying to, we're just a couple traders here trying to let you know. Join us. It's definitely worth it. Joseph has a good question. Are you able to get the process of what it took the trade from just idea to putting on the trade so that you can learn how to find trade ideas on your own as well? 100%. 100%. Something that Matt Maley will never deny you is an explanation for why he's doing what he's doing.
Oh, he'll give you an over explanation.
Yeah, he will tell you everything from start to finish. Like, you just tell him what level of like explain it to me like I'm a professor, or explain it to me like I'm a 5-year-old. You tell him how much detail you want. He will give you the research. He will give you the whole rationale that went into it. And he'll, like, the thing that's great about him is a lot of his trades are always in context. There's an entry and an exit, and he'll say how many months or how many weeks or how many days or how many even hours he plans to stay in it before closing. And there's always a context to that. It's because XYZ is going on, XYZ is coming up. That is what makes this trade work. That's why I'm getting out when I'm getting out. So that was a really good question, but there you go. And guys, that is 55 seconds left for Rodrigo and me being here.
Barry's got a great question there, Neil.
Barry, some of the younger people in our household are interested in learning and starting with penny stocks. Would this chat room be suitable for young traders? With it, yeah, no, there's no swearing. Matt's very, very clean. It's absolutely suitable for young people. Ask the right questions. Ask the right questions, and you'll get the right answers. Absolutely.
Everybody in our chat room, unlike Reddit boards, unlike Discord chats, unlike Facebook groups, are verified real traders. These are real people with real accounts that are trading. So you don't have spammers like you do on Stock Twits. Hey, join my Discord. I just turned 3K to 700 grand. You don't have spammers. We don't have any. This is focused on trading. We're focused on making money. So absolutely, this group, I mean, it's great financial education, to be honest, because you're not going to get this in college. They don't teach you trading. They don't teach you about pullbacks. They don't teach you about short reports. They don't teach you about Fibonacci retracements. They teach you how to calculate a dividend. Well, you know what, as a trader, like, I'm not trying to wait 50 years and figure it out. I'm trying to make money now with the volatility. So they don't teach you this, but guess what? Benzinga has your back. So thank Neil for coming up with this, because he packaged this baby for you guys. Neil is the guy you got to thank here.
And hey, guys, I'm just trying to give you guys what I wish that I had. So this really comes from a place of love, caring. This really comes from a place of, look, I'm a retail trader just like you. And now I'm lucky enough that I've been working with Benzinga for 4 years, and that we met Matt. So we're really, really proud to be offering this to you guys. We are at time for the session, guys. Thank you so much for the questions. Matt Master Chief? He might be until the games got weird and Master Chief had like a full name and started talking. So guys, there is the link. Use it now. Get half off. A nice, clean, no dirty talk chat room focused on actually growing as traders, actually making profits in financial markets, designed so that if you are managing your stops, managing your risk, and targeting good picks that Matt is going to feed into the chat room, you should be able to pay for your subscription very quickly. And then it's just a game of how much can I make on top of that. The idea is to profit from this investment, which is joining the chat room. That's what it is. It's an investment. It's not. I don't think of it as just a cost. This isn't just buying, a new blender, a new microwave, a new washer, or something like that. This is something that is supposed to pay you back. That was designed for. So guys, the link is in the chat. We are out of time. I'm going to go ahead, and Rodrigo and I are going to dismiss ourselves. And I'm going to run this timer for 5 more minutes. And that's how much longer we're going to let the stream run so you can get that link. Okay, guys? I'm starting it now. 5 minutes. Hopefully we answered all of your questions. Danny, I agree. Matt is awesome. I highly you're grabbing this, highly recommend it. Get in there. Let us know what you think. Offer does end at midnight. Link is in the chat. And I'm going to, Rodrigo, if you don't mind, I'm just going to put your info up. So if folks have questions, I think that's the best one to have on the screen. Let's see if I can find it. There you go. All right. So that one's cut off. That one's weird. There we go. So there you go. If you have questions, Rodrigo is your man on the inside at Benzinga to hook you up. So, all right. Thank you for tuning in. Happy trading. And thank you for being here, Rodrigo.
I want to thank the subscribers for grinding with us, because I'm thinking, you know what, Neil, we're going so hard every day, but then I look at them here every day, always coming back for more education. Keeps me going, man.
Yeah,
I love it.
And for the new folks that just joined, Rama, Nancy, Bren Atkins, M. Raymond, Irvington, Maxwell, the list goes on. welcome to the family. Welcome to the Benzinga Inner Circle family. We are going to have a lot of fun trading together. We're going to learn a lot. So congratulations to you guys. So with that, Neil signing out.